is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo on assignment. Amy Morris will join us today from Washington. That's a good and beautiful thing. And Michael Barr as well. Before CPI, before the Fed. Let's, I guess, go to that right now. I'm not focused on it. It's a nothing burger, right?
Well, I don't know. I mean, I guess the Fed's not going to do anything at this point in time here. But looking at the CPI tomorrow, Tom, on a year-over-year basis, ex-food and energy, looking for growth of 3.5%. That's not 2%.
I think the growth issue, I agree. I
Yeah.
agree. The growth issue is there. It's tangible as America's economy. Still growing, lots of other distractions. We'll talk France here in a moment with Virginie Maisonneuve as well. We're going to audible that and talk a lot about her France. But just a lot going on. And then we recover from Apple intelligence. What do you think?
The stock didn't really do a whole lot yesterday. That kind of tells you everything you need to know. So, I mean, it feels like a typical Apple approach to a new business.
Very predictable.
They're going to be predictable. They're going to be cautious. There's no need to be on the cutting edge from Apple's perspective, but they're going to be there.
I'll be honest, I don't get it. I mean, I never wore a black turtleneck, so.
No, exactly.
I guess that's not for me.
But,
I felt very old.
We're going to have two smart people, Tom,
Yes.
on the Apple story. Dan Ives from Wedbush Securities, and then we're also going to have our good friend Gene Munster, managing partner at Deepwater Asset Management. Two of the smarter voices on that whole Apple thing. And we're going to have them both this morning.
With the Interactive Broker Studios, of course, on YouTube, search Bloomberg Podcasts and subscribe to Bloomberg Podcasts. I'll get out there in a live chat in a moment in Washington with our Bloomberg Business Flash, Amy Morris.
All right, good morning, guys. Wall Street is waiting for tomorrow's double whammy of data, inflation numbers in the morning and the Fed decision in the afternoon. Futures are lower as everybody's waiting to see what happens. S&P futures down 0.3%. NASDAQ futures down 0.3%. Dow futures down 0.4%. And checking the bonds now, the 10-year Treasury yield at 4.42%. That's down 1 full percent. The 2-year yield is down almost 1% at 4.83%. And NYMEX crude oil now at $77.45 a barrel. That's down 29 cents. Brent crude down 27 cents at $81.36 a barrel. Checking gold very quickly, down 0.1% or $2.50 now at $23.24 and 20 cents per ounce. And just taking a peek at Bitcoin, just so you know, Bitcoin is down now nearly 4%. Wow. And that's your Bloomberg Business Flash. Tom and Paul.
I got a blue button here. It's the Detroit Lion blue button. Excuse me, I was typing into live chat.
I know you are.
I was rattled here. Is there a why that Bitcoin's down?
I don't. Maybe Matt Miller is just souring on this thing. I don't know. I'll check in with Matt a little bit later. But we're down, as Amy was just reporting, almost 4% here. $66,850 on Bitcoin. It was just above 70,000 a cup of coffee ago.
How did my French go? I got as far as Où est la bibliothèque?
Oh, very nice.
And I just put out on live chat, Bonjour, le monde surveillance.
Oh, very nice.
Virginie Maisonneuve is going to hang up the phone. Joining us now with Allianz. Jess, I can't say enough, folks, about the honor to have with us with the turmoil in France. Virginie Maisonneuve joins us now. Yes, Global CIO Equity at Allianz, but we really want to hear from her about this turmoil. Virginie, what happened to Charles de Gaulle's Fifth Republic? Where did the middle go that Charles de Gaulle built out of World War II?
Well, it's really interesting, and the results of the European elections were really shocking in a way, although not unexpected. But the quantum, I would say, the quantum of that shift is really important. It's a bit of a uniform trend. You have Poland, Holland, France, Germany, Sweden. They've all moved towards more the far right. And of course, the action that President Macron has taken, calling for a snap election yesterday, is really important, right? It's a bet But I think he's got some good rationale for doing it. But it's going to be really interesting.
Virginie, I think of a list of surveillance guests, including Madame Lagarde, who have a transatlantic perspective. You're on that short list. Can the political tensions of Europe carry over into America, and particularly to November of this year's election?
Well, I think they are definitely linked in the sense that if you look at President Macron, he's done quite well on the economic front, the defense front, if you want, the diplomacy front. But some of the concern that have led the French electorate to move to the right were domestic issues, issues of security, fear of the war, terrorist attacks, a lot of attacks on kids at school, for example, immigration, integration, all those issues are important. And of course, the far right party is more in support, as Madame Le Pen and Bardella have made it public, more in support of Trump. So there's definitely some links there.
Paul, I think we need to clear this up. I've had a lot of criticism about the use by Bloomberg of far right. We are not editorializing there, folks. The parties are actually called, there's three, and they're actually called far right. When we say far right, that's the identifiable name of three of the fractioned parties of the more conservative wing of French politics.
Virginie, talk to us about when we think about over the last 24 hours of the European Union and in France with the snap elections, how much of that is economics? How much are people concerned about their economic outlook, inflation, and so on?
Part of it is inflation, but I really think it's all about security, immigration, and in a way, a vote against green seen as a cost. It is really interesting. If you see the one of the biggest loser, of course, is the Green Party. So I think that combined with the rising popularity of Mr. Bardella, the 28-year-old, that if in fact there's a majority in the next elections for Madame Le Pen, he could become, a very important part of the political life. And of course, he's very untested. The President Macron had promoted Monsieur Attal as a younger, if you want, politician, although older than Bardella. And in the recent debates around key topics around electrification, etc., it was very clear that Monsieur Bardella was not really prepared for such a mandate. I think that's the point that Macron is trying to make. Bring them in and see how they will or will not be able to do as a big part of the government, and hopefully influence in his mind the next elections in a couple of years, in 27.
All right, so Virginie, given all that backdrop here that we've seen over the last, again, couple of days coming out of Europe, at Allianz, how do you think about just allocating capital across the globe? I mean, how do you think about Europe versus the U.S. versus... Is
France on sale?
Is France on sale, exactly.
Is France on sale? It's that simple.
You might be able to buy it a bit cheaper. I mean, in general, the European markets are quite cheap. Of course, what you have supporting the markets is also the rate cuts taking place ahead of the Fed. Of course, what are the next ones? When are the next one is the big questions. You also have some interesting themes around electrification, around industrials, and the energy transition. So we have not only the climate transition, but also the energy transition, given what's happening with Russia. And that is an important part of investment that I think is interesting for global investors.
This has been very valuable. Virginie Maisonneuve, thank you so much. With Allianz, as we audible towards a turmoil, the political turmoil in France. Futures at -19, Dow futures -174. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Amy. Secretary of State Antony Blinken says Israeli Prime Minister Benjamin Netanyahu has reaffirmed his support for a ceasefire proposal announced by President Biden. Blinken is in Israel for his 8th round of Middle East shuttle diplomacy since the war with Hamas began in October. He also says Hamas's response to a UN Security Council resolution backing the ceasefire is a hopeful sign. Bloomberg's Jumana Bersechi reports the agreement around the three-phase plan remains complicated.
Phase one would entail a 6-week ceasefire and the exchange of some vulnerable hostages, including the elderly, children, and women. It seems like both Hamas and Israel are happy to sign on to phase one. The major issue becomes what happens with phase two and that proposal of a permanent ceasefire.
Bloomberg's Jumana Bersechi. Jury deliberations continued today in Hunter Biden's federal gun trial. The president's son has pleaded not guilty to allegations that he lied about his drug use when he bought a gun in 2018. Malawi's president said Vice President Saulos Chilima was killed in a plane crash. The Malawi Defense Force aircraft carrying Chilima and 9 other passengers left the capital yesterday for Mzuzu, a city in the country's north where the terrain is hilly and densely forested. The journey was scheduled to last less than an hour, but contact was lost. There were no survivors in the crash. Civil rights groups are urging a federal judge in Iowa to put a stop to the state's new immigration law, the measure which criminalizes illegal re-entry and allows local authorities to arrest and deport undocumented immigrants. Her return to the U.S. is set to take effect next month. Erica Johnson is with the Iowa Migrant Movement for Justice.
Supporters of the law say that they passed it because they were tired of the way the federal government was handling immigration. This law is no solution to that.
Erica Johnson with the Migrant Movement for Justice says the measure is unworkable, creates fear, and drives misinformation in immigrant communities. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg, Tom and Paul.
I like what Brian Windhorst says over at ESPN. They got turned down very publicly by their crush. And that carries pain, whether you're Tom Keene crushed in junior high school or you're a multi-million-dollar basketball team out in L.A. The guy from Connecticut said stores over L.A. Paul Sweeney, discuss.
Yeah, interesting. I mean, we've seen a lot of college coaches leave for the NBA.
They get a lot more money.
They get more money, but they don't have to deal with all this transfer portal and NIL and all this kind of
Recruiting.
stuff. Tremendous amount of turmoil in the university football and basketball. But Danny Hurley decided to stay at UConn. He's going for a three-peat, 3 national championships in a row. So we'll see how that goes.
That is the key right there why I bet he's staying. Because, listen, yes, you're going to make more money if you go to Los Angeles. But it's the more volatile job where, like, if I'm going for my 3rd championship, they're not going to get rid of me unless I, trip over my feet coming out on the court.
Or is it as simple as he waits, he does another year at Con, whatever happens, UConn. And then he's got another opportunity, and maybe he doesn't have to go to L.A. where he's got to worry about the traffic. He goes to a different city that's a little more.
Yeah, exactly. And you got to dealing with LeBron in his last year or two in the league, and maybe Bronny and all that kind of stuff. So, no, he's in a good spot. It was a no-lose situation for him, and he took what I think he feels pretty comfortable with.
Plus, he clicks into the new TV contract. I mean, like I said the other day, everything lifts, right, Paul?
Yeah. Everything lifts, and looking at some, but we'll see. He's going to get a new contract at UConn too, make a little bit more money here. So, so anyway, Tom got some news breaking across the Bloomberg. Use of cash at General Motors. The GM board approves a new $6 billion share buyback. So
this has been asked. I interviewed Mary Barr at some point, and I always bring up use of cash because that's what shareholders want to know.
Yeah, stock's up about 1.1% here in pre-market trading. So how about that?
I guess it continues. And I was sort of, I know it's a developers conference, but where's the financials yesterday with Apple?
Yep.
From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Business Flash is brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products all across major asset classes. CME Group, where risk meets opportunity. Futures are lower. Traders positioning themselves ahead of this week's U.S. inflation data and Federal Reserve monetary policy decision. S&P futures down 0.3%. NASDAQ futures down 0.4%. The Dow futures down 0.4%. 10-year Treasury yield at 4.34%. The 2-year at 4.84%. European assets extended Monday's losses. Jitters over political upheaval in France continue. The euro now down 0.3% at 107.30 against the dollar. General Motors Board approved a new authorization to repurchase up to $6 billion of the company's outstanding common stock. GM shares are higher, and Apple's AI for the rest of its plan gets lukewarm reaction. Shares declined as much as 0.7% in the pre-market. And that's your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Amy. Greatly appreciated. Joining us right now, and for those of you on radio, you're fortunate.
Yes. Oh, boy.
Joining us now, you look yesterday at the beautiful tapestry and the colors, and everybody's so plain and boring. Thank God Dan Ives was there to throw a little Pantone into it. He does it over again. He's staying at a 17th century boutique in Palo Alto this morning, joining us, the king of chintz. If this was TV, you get the wavy lines, Dan Ives. I mean, did they succeed yesterday at the Apple Intelligence Conference, like the interior design of the shot in Palo Alto?
I thought they laid out what I view as the next growth strategy for Apple. I mean, this is really Apple's castle. And I think Cook talked about it. This Apple Intelligence, it's really now the start of AI coming to most consumers. And this is how it's going to come through. I viewed it as a home run, in my opinion.
Okay, Dan, Paul's got a bunch of intelligent questions, so let me get the dumb question out of the way. Is Apple Intelligence going to let me figure out how to delete the 70,000 emails I have, or are they going to help me organize my photos?
Well, I think they're going to be able to do whatever you want, because they're ultimately, this is going to be an AI brain in your phone that's going to understand the user and the owner of the phone the more and more that they're together. So they're going to understand your habits, restaurants, which people you like to pick up the phone from, which you don't, what photos you prioritize over others. And now, and this is the key, Tom, now developers, apps, hundreds of apps will be built on this stack. That is the key from a services perspective.
Hey, Dan, we saw no appreciable movement in the stock yesterday. It's actually off a little bit pre-market here today. Does that tell you that maybe the market was underwhelmed by what they heard from Apple?
Yeah, Paul, I think, as you know well, a lot of these events, you'll have that knee-jerk sell in the news. I think that was the wrong move here. I think we look back, this will be a historical moment for Apple. I think a top 3 historical moment.
So, but they didn't really announce any proprietary software or anything like that. So they're going to be using ChatGPT. Is that an admission that they don't have a AI, kind of mousetrap, if you will?
Yeah, look, they did talk, and we'll see more on iPhone 16 as this comes out, but LLMs, they're going to be built into the phone. So there is significant proprietary technology that they're building into the actual phone. OpenAI, I mean, this is a joining of forces. It's the best AI technology out there, and now it's essentially going to be white labeled within Apple in a secure, almost lockbox environment.
Wait, let me stop there. Dan Ives, Elon Musk said it's not a lockbox environment. How did you respond to what Elon Musk said? He's not going to let the Dan Ives iPhone 17 or whatever into the Musk world.
Yeah, I mean, look, I think Musk, that's also goes back to a beef with OpenAI and Altman. I see there's no way that happens. You have 1.5 billion iPhones. I think that was more of a knee-jerk reaction, what Musk is talking about. But it's a sour grapes as well, because this data that Apple has and really control of the ecosystem, that's what Musk wants. But you cannot get it now with OpenAI and Apple joining forces in what I view as really a revolutionary moment, not just for Apple, but consumer AI.
Hey, Dan, I'm sporting the Apple iPhone 11, I think.
It's almost as old as Tucker's.
Exactly. It's almost a flip phone. Do I upgrade here with the 16 because of this AI stuff?
Well, yeah, because essentially what's going to happen is you're going to get phased out. Because even on Apple Intelligence, only iPhone 15 Pro and more are going to be able to use it.
Right.
So, Paul, I think October, as we go into football season, you're going to have an iPhone 16.
Okay, well, let's do the calendar here, because I think that's important. I think they did a lousy job of that yesterday. The new iPhone is coming out when, Dan Ives, quickly?
Mid-September.
Mid-September, October. I need a new one. Paul needs a new one. Tucker needs 3.
Yeah.
Okay, so we're going to get a new iPhone. Are we going to be able to be very Apple Intelligence day one, or is it phased in into next year or the year following?
I think it's day one. I mean, there will be other solutions that come through, but day one, Apple Intelligence will actually kick in.
How's the iPad doing? All the upward over. I mean, the beautiful screen. I think we've all decided the screen is killer. But are they moving units?
Oh, yeah, I mean, all of our checks from Asia over the last few weeks show units up significant. Look, this just speaks to this renaissance of growth is underway. A year from now, we're in a $4 trillion market.
To review here, Dan, I mean, the things in the dumps, 160, 170, you said shut up and buy it. We're up 15%, right up near a 198, 199 record high. Frame your enthusiasm now to Labor Day.
AI adds $30 to $40 per share of the story. I think we're looking at 225 to 250, as we go toward fall. And then I think investors start to really understand what's happening here, and that's the march to $4 trillion where it begins.
Do you see that in channel checks? I mean, do we have to wait for the earnings call?
Yeah, but we just came back. Like, our checks from Taiwan are showing units up mid-single digits going into iPhone 16. That's not even factoring in additional Slim or other units that they're going to ultimately offer in. I think Street is massively underestimating what the growth is going to look like, and that's why I think we look back. Yesterday will be a moment.
Paul, we've been doing this for a combined 47 years. Is that the most hideous clash of Osborne and Little, George Osborne and Little Chintz, with whatever God-named shirt he's wearing?
I can't believe his wife lets him out of the house in the morning.
It's the Clash.
I know.
I mean, it's in honor of one of the Clash songs.
I mean, it's the reason to subscribe to YouTube and to get us on YouTube is to see this.
Search Bloomberg Podcast. Search Ives Design to get Bloomberg Surveillance. Dan Ives, thank you so much. Early in your Palo Alto morning, go down to True Nation and have a avocado toast on us. That's what you do.
That's what they do.
You go to True Nation and talk operational research and things like that. We got Gene Munster coming up as well.
Yeah, so that's a good bookend. We got Dan to start the morning and Gene to finish it up here. So we get a good sense of kind of what this means for Apple, for iPhone sales. Are you going to rush out this September, Tom, for a new iPhone?
Anecdotal story. They call me up. I'm like 22. I can shave 3 times a day. Tom, come down to the store. So I go in this little dumpy store. This is in Rochester, New York, 45 years ago. And there's this new thing called Lisa.
Oh,
and you could tell from 15 feet away it was a failure.
Yep.
And to this day, I don't know how I knew that. It was just ugly.
Yeah.
And that's what Steve Jobs brought, was this beautiful aesthetic that I guess they just continue.
They continue to do. They're not first, Tom. They just tend to do it better, cleaner, smarter. I don't know.
And they can dovetail with Microsoft. They can do this right and not compete with Microsoft.
Yeah.
I guess.
I guess. Yeah.
And NVIDIA does their thing. And
it seems like this AI thing, everybody seems
we
to
are the
win
world.
here. Exactly.
Fascinating. Stay with us. Gene Munster with us later on the program. Lots of other good people coming up with inflation and the Fed tomorrow on Apple CarPlay. Artificial Apple Intelligence, Apple CarPlay. That's getting an update as well. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Amy Morris. Wall Street's most prominent trading desks, JP Morgan Chase to Citigroup, are urging investors to get ready for a potential stock market jolt after U.S. consumer price data and the Fed rate decision are both due out tomorrow. Futures are lower. S&P futures down 0.3%, NASDAQ futures down 0.4%, Dow futures down 0.4%, the 10-year Treasury yield at 4.44%, the 2-year yield at 4.84%. And the wraps are off Apple's bid to play catch-up on artificial intelligence. This plan includes a partnership with ChatGPT maker OpenAI. It received a lukewarm reaction. GameStop shares lower in the pre-market after its share sale plan sparked a sell-off. Shares are now down 3% in the pre-market, and Bitcoin is now down 3.8%. Analysts say there's plenty of inflow, just not enough to boost the price of Bitcoin. Bitcoin is also waiting for that eco data and the Fed decision for tomorrow. And that is your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Amy, what do you think? I mean, Lisa's on assignment for Bloomberg LP. She's down in Atlanta. And I mean, it's sort of like Cracker Barrel.
I told her where the nearest Cracker Barrel was.
You know, we're worried about Lisa this morning. I mean, where's she going to get breakfast? And I went to her, and she's at Buttermilk, Buttermilk Kitchen. It's Amy's kind of place as well.
Right.
Okay. You know, it's like healthy.
I'm a biscuits and gravy girl.
They got get this, a pimento omelet.
Oh.
What in God's name is a pimento omelet?
Sounds marvelous.
Sounds like somebody from the University of South Carolina came up with that.
Yeah, pimento omelet with red pepper jelly made from scratch. Enjoy a banana bread granola bowl made with creamy vanilla yogurt.
Wow.
That says Lisa Mateo.
That's Lisa Mateo right there.
In Atlanta, supporting Bloomberg LP, and we're glad that Lisa's down there. She's down there. She gets up on stage and says, "Go, subscribe to YouTube and search YouTube."
People run to it.
Amy Morris, thank you so much. Greatly appreciate it. 19 years ago, and I'm shaking that I'm saying this. My book of the summer was a magisterial short essay by Lawrence Meyer, A Term at the Fed, and it was the best insight into the operation, the process of the Greenspan Fed. Larry Meyer out of Washington University, St. Louis is one of our world-class economists. Derek Tang is lucky. He gets to work with Dr. Meyer each and every day and joins us now as chief economist. Derek Tang, what's it like to work for Lawrence Meyer? He's a fiery guy.
He is. I mean, it's opinionated, and we have some fiery debates about what's going to happen, and this year is no different.
Give us a distinction of a debate. I don't need the inside baseball, but where do you and Professor Meyer, where do you not disagree, but where's a distinction of debate?
Well, I think the biggest question for us now is how 2025 is going to turn out if Trump wins. I think this is where, we have one of our, most furious disagreements. It's difficult because the Fed needs to think about how it's forecasting 25 and 26, not only when the time comes, but even right now, it decides how to formulate its forward guidance and how credible that's going to be.
But a la Apple Intelligence, how in God's name do you go out 24 months with the technology and productivity mystery of America?
It's difficult. I mean, Larry likes to go back to the 90s when, Greenspan made this legendary macro call on productivity, right? Which really really let the expansion continue in the 90s beyond what anyone imagined. Do we have that today? I mean, are we in a 1995 situation or are we more in a 98 situation? I think that's one of the questions investors are grappling with. And the Fed needs to hedge both sides. If it gets this wrong, having been through a period of high inflation already, inflation expectations could be under threat. At the same time, you don't want to let a recession begin earlier than it has to.
So that brings us to kind of what do you think we're going to hear from our Federal Reserve in a couple of days here in terms of language, in terms of maybe some I don't know, some body language about how they're thinking about going for the remainder of the year?
Yeah, as we wait a mood of how they're thinking, since March, there have been some remarkable changes in sentiment. We think that the dot plot is going to imply 2 cuts this year rather than the 3 shown in March. But it's going to be pretty close. There are going to be a lot of dots above that 2-dot projection, many at 1 or even 0 cuts. And, that's going to be contextualized by an inflation forecast that's marked slightly higher. So for this year, maybe core inflation is more like 2.8 than 2.6. That corresponds to 1 fewer cut this year. But if the committee thinks it needs a little bit more insurance against those higher inflation outcomes, it could decide to be even tighter.
I got to interrupt. Paul's on fire today. I got to interrupt. Can you imagine Lawrence Meyer, Governor Meyer, doing dots?
Well, I think he likes the dot plot. I think there are improvements that could be made to make the dot plot a little bit more meaningful. The dot plot needs to be viewed in the context of what the macro projections are, right? That is what really tells you what the Fed's reaction function is, what their sensitivity to inflation, to employment data are. So the dots are a good tool. Does it constrain the Fed? Does it box them in sometimes? Yes. But that's just the name of the game.
Derek, how about we've got the ECB, the Bank of Canada, they're already moving on rates here. Is the Fed comfortable not leading the world's central banks in terms of interest rate policy?
Well, I wouldn't be sure that they would put it that way. I mean, I think they still see themselves as leaders, and they certainly are, given the prominence of the U.S. dollar. In any case, I think the U.S. is just facing a different type of situation. We have the strength and resilience that's rarely seen in other developed economies right now. In the last few years, policies taken by the United States and maybe missteps by other countries have really concentrated market share and investment and so on in the homeland. And that means the U.S. has strength it needs to counter. And having the reserve currency and the currency in which a lot of commodities are denominated in means that we can afford, we have the luxury to continue on our path of slightly tighter policy to keep inflation down, and other countries are just price takers.
Derek, one of the things that we've heard from forecasters is, 2024 is a election year, a presidential election year, and how that may impact Fed policy here. So I guess we're not going to get much tomorrow with the Fed. So now eyes are looking at, I don't know, I guess September maybe for some movement, but how do you factor in the political aspects of it being election year?
Sure. Well, LH Meyer, we believe the first cut won't come until December, so we'll only have one cut this year. But that's not motivated by the fact that we have an election in November. It's just that's when we think the data will show that the coast is clear. The data could well show that the coast is clear by September. The data may permit them to start to ease, give them an opening, or even demand an easing by that point. And we don't think that would stop the Fed. I think they're not trying to put their thumb on the scale. But I think they are aware that going into December and beyond becomes a little bit more difficult. Hopefully by December, we'll know the outcome of the election, who has won, the legislature, who has won the White House. But even then, the exact contours of the policies for 25 and beyond won't be known. What's happening to tax cuts? What's happening to immigration policy, foreign policy, trade? These things take a lot of time to iron out, even if you know the composition of politics. So in that sense, the Fed might decide that it needs a little bit more risk management going into 25. And so the pace of easing might be affected, but not so much the onset.
Derek, thank you so much. Derek Tank, greatly appreciated this morning with LH Meyer. The Fed, I try to avoid the Fed parlor game. I think people know that. I just, Pharaoh's in love with it. John just goes, mental Fed parlor game. And I'm like, yeah, whatever.
Right.
Derek's all deep into it.
Yep. Well, that's what they do at LH Meyer.
Dots.
Yeah.
Dots and all that.
Dots go, DOTS.
Boston Red Sox dots aren't so dotty right now. Let's do the news. Futures -18. Excuse me, -15. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Amy. Secretary of State Antony Blinken says the UN Security Council's vote in favor of a U.S.-backed proposal for a ceasefire in Gaza has made it as clear as possibly could be that the world supports the plan. He again called on Hamas to accept it and said Prime Minister Benjamin Netanyahu had reaffirmed his commitment to the proposal. Before departing Tel Aviv, Blinken spoke with the families of the 8 remaining American hostages in Gaza. Blinken said the only way to get all the hostages back to their loved ones was for both sides to commit to a ceasefire.
The proposal that President Biden put forward is the best way to do that.
This week, the UN Security Council voted to approve a ceasefire deal. Jurors in Delaware are set to resume deliberations in the criminal case against Hunter Biden at 9 a.m. The federal trial is over a 2018 gun purchase that prosecutors say President Biden's son was addicted to crack cocaine. Hunter Biden's lawyers have argued he did not consider himself an addict when he bought the gun. Donald Trump is slated to meet with the Senate Republicans today before heading off to a meeting with prominent CEOs at the Business Roundtable in Washington. Bloomberg's Ed Baxter has the details.
This is the latest effort to plot out priorities if Trump wins and also the pathway to get there. In an email obtained by Bloomberg, Senator John Barrasso, part of the GOP leadership, made the invite, saying it will be helpful to hear directly from Trump about his summer and to share strategic planning. The CEO meeting is being hosted by the Business Roundtable in Washington, and of course, Trump is hoping for backing and monetary help heading into November. Ed Baxter, Bloomberg Radio.
Meanwhile, former President Trump's interview with a New York probation officer took place yesterday. It's required of all convicted felons. The officer of the office will now write a report to the judge who will sentence Trump in a matter of weeks. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Amy.
Michael, thanks so much. Okay, Paul, help me out. Son of Rich Guy 1 offers $2.25 billion for Paramount, and then Son of Rich Guy 2 offers less, $2 billion. I'm lost on Paramount.
What you have here is nothing happening, Tom. You have, in my opinion, if I were a banker running the sale here, I've got nothing here. I've got no credible buyer. I don't have a strategic buyer like a Disney or Warner Brothers Discovery or an Amazon. I don't even have a financial buyer like a KKR or Blackstone. I got nothing.
I got David Ellison, and I got Edgar Bronfman Jr., who ran Warner's Brother Records beautifully.
Yeah, exactly. You know? I mean, and Seagram's, and well, that's a whole
Seagram's,
other story.
That's
about,
a history.
I'll hold that.
Boy, that's ancient.
That's ancient. So you really don't have anything. And actually, what it is, I'm having a dinner with some media executives next week, and it's just sad that for the Paramount, CBS, Viacom, you just can't give this thing away. And again, 5 years ago, we would have had a line around the block to buy this company. And it's just changed. The world's changed in terms of streaming. And here you are if you're Paramount.
Remember Seagram's gin?
Yeah, exactly.
You know, the yellow label. You were 16, and you know, how do you make a gin and tonic?
Well, wasn't it? There was a Seagram 7, wasn't there? Also,
there was Seagram 7 was the big drink. When I was in high school, that was the the big drink.
And that was a Bronfman family.
Parents, yes,
Bronfman was Seagram's. Then Edgar went into media and.
I saw Edgar Bronfman Jr. once on Madison Avenue, and I said, "Thank you for Seagram 7." I did that as well. We'll continue to follow that. Paul Sweeney up to speed on this truly soap opera from Paramount. We go to the soap opera, The Fed, over to the soap opera of Paramount. I don't know which is more miserable. Right now. I mean, Anna Wong has been on fire. She's coming up.
She is.
And she's just been on fire.
You got 2 economists in a row. I'm not sure if we're allowed to do that on surveillance.
Well, yeah, we are. But Dr. Wong, folks, out of Chicago with Bloomberg Economics, I mean, Paul, last week she was the zeitgeist of the jobs report, this whole birth-death debate. And all that.
Chicago, that's a lot of math, as I recall. People in Chicago, they like math.
They're very microeconomics. Jeff Curry was a professor there.
Yeah, that's right.
Commodities guy, Goldman Sachs.
Some of the best economists out of Chicago.
Yeah, there they are. Futures negative 17, Dow negative 171. VIX is really not out. You think it's like a 14's VIX? No, 13.21. Yields come in. The Sweeney yield, 4.84%. On the 2-year, a little lower yield there. And the real yield comes in 2.13%. That was 2.15. I do want to make note, we're underplaying it, but renminbi weakens out to new weakness today, 7.25 yuan. This is off the radar, but there it is on the Bloomberg screen. The Chinese currency continues, I'll call it a managed depreciation. Dollar yen 157.0 and euro 107 on euro. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Markets in a bit of a wait-and-see mode ahead of tomorrow's economic double whammy. We get a final read on consumer prices tomorrow, hours before the Fed issues its latest policy decision for the month of June. And futures are lower. S&P futures down 0.3%. NASDAQ futures down 0.3%. Dow futures down 0.4%. The 10-year Treasury yield at 4.43%. The 2-year yield at 4.84%. And French markets are on the move. The yield on 10-year notes jumped as much as 10 basis points to 3.32%. That puts them on course for the biggest two-day increase since March of 2020. Now, all of this is because of speculation that French President Emmanuel Macron may resign. A source close to Macron denies that report. The euro now down 0.3% at 107.32 against the dollar. And check out Eli Lilly, the drug maker's shares higher in off-hours trading. The Food and Drug Administration gave its backing late yesterday for Eli Lilly's new Alzheimer's treatment. Shares are up now more than 2% in the pre-market. And that is your Bloomberg Business Flash. Tom and Paul.
Amy Morris, thank you so much. Lisa Mateo in Atlanta, where she's having a pimento omelet. We were just fired up on the live chat on YouTube here, Paul. And, you know, it was sort of, my mother inflicted Kraft pimento cheese spread on us.
What do you do with this cheese spread?
You put it on plain white bread and serve it, and you go, Mom, why am I eating this? Amy had the same twisted childhood.
Yep.
But this is like posh. I mean, they serve pimento sandwiches at the Masters.
I've had those, and you get those for like $1 or $1.50. They keep the prices
little
super
cutesy
low.
pie things, I assume?
Exactly. Yeah, exactly. All kind of wrapped
Amy,
up.
have you ever had a Masters pimento cheese spread?
I've had a pimento's cheese spread Masters adjacent.
Masters adjacent.
There you go.
Very good.
Very good.
Only Amy Morris. On the Pimento Watch, Lisa Mateo in Atlanta with Bloomberg LP, helping get the message out to terminal users across this nation. Bloomberg Surveillance this morning, we're brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests, only at ibkr.com/RIA. ibkr.com/RIA. We deal with hundreds of economists who work not selfishly to be part of the zeitgeist, but just to think as hard as they can. Last week, Anna Wong, Coast to Coast, was the zeitgeist in economics. I'm going to look back, Paul, before we look forward to the inflation and Fed decision. Anna Wong, you were brilliant in saying the miscalculation of our labor economy will not be seen in the jobs report of a few days ago, but in coming months and quarters. When will we see the birth-death calculation eliminate thousands of jobs?
Well, not for a while, at least not on paper, but certainly people feel it as their establishment or Red Lobster restaurant closes. But yeah, in terms of dates, late August 21st, basically 2 days before Powell's Jackson Hole speech, is when BLS will release the first release of the first quarter of 2024 census data on establishment closures and deaths. And right there, you will have a very good clue of how the annual revisions, which would be released early next year for the whole revision period of April 2023 to March 2024 will look like. And I think that number would be very closer to 1 million than not in terms of downward revisions.
All right, Anna, tomorrow, a busy day. Tomorrow we have CPI. We also have the Fed decision. What kind of language do you expect to hear and see from the Fed tomorrow?
You know, Powell is just unconditionally dovish. So in any given day, if you don't know, you haven't tuned into economic news for a week, you could almost bet that Powell will be more dovish 51% of the time. But given that we did have mostly downward surprises to economic growth data, jobs being the only exception, but even there you have the unemployment rate rising to 4%. I think Powell will be dovish. I also think that the Fed will not be alarmed by the jobs report last Friday in either way, either by the rising unemployment rate or the very strong non-farm payroll, because the Fed believes that it's okay. It's okay to cut even if non-farm payroll is going to keep printing 270K, because they interpret immigration as the driver of that, and it's disinflationary. On the other hand, they also forecast unemployment rate would be rising and then declining later this year. So even if they're looking at this 4.0 unemployment rate, they will be like, well, maybe it's just on the path that we are forecasting, and it will be falling toward the end of the year.
So Anna, is it fair to take off any discussion of a rate hike in 2024? Is this a Federal Reserve that has really no appetite for a rate hike? It's just a question of when they will cut?
I think it will be extremely hard to get a rate hike. I would put the subjective probability at below 10% right now. So even if you plug some inflation and unemployment numbers into the inertial Taylor rule, basically it will take core PCE to increase to over 3.8% on a 12-month basis by the end of this year in order to get a rate cut. And everybody right now expects 12-month change to be, below 3.1%. We are at 3.0%, and we are already at one of the highest among the Bloomberg consensus survey. But yeah.
Anna, where are we in a year? I mean, you nailed the zeitgeist last month. Everybody quoted you up, sea to shining sea. Where are we in a year with this foolishness, Anna Wong?
A year from now, a year from now could be a completely different world, because we might have a different president. We might have the same president, but even with the same president, a lot of things could happen. On top of that, we will have the revisions up to March of 2024, which will reveal, in fact, the labor market is weaker. So it could be that the Fed would put much more weight on their full employment mandate, and will be cutting more sharply next year. So they would get onto a very slow start to cutting this year, but then when next year rolls along, it will be faster.
Anna, congratulations on your and your team's work, and I should mention Global Bloomberg Economics as well. Bjorn's in Barcelona. They're all in romantic places.
Yeah.
You and I are stuck here.
No, yeah.
Stuck here in the middle. Anna Wong, I don't know.
Our fishbowl.
She's in Turks and Caicos.
Of course.
Anna Wong, Dr. Wong is head of Bloomberg Economics for the United States, and it's been something as well. You believe France? Have you been reading about this? I'm trying to read it. I'm reading a lot of Le Monde in English.
Yep.
And it's an uproar.
Yeah, I don't know why. Yeah, I guess I'm just, like most Americans, we're not really familiar with these call and snap elections. What's the strategy behind calling them or not calling them? And is it a sign of strength or weakness? Or, I'm not sure, but it's certainly going to be, it was, I guess, really unexpected from the smart people that we speak to.
On the Fifth Republic, and thank you, Jonathan Fenby and others, for making us smart over the years, de Gaulle made it a very strong presidential structure. Mm-hmm. And people, I guess his interior advisors were stunned at his decision. It's a two-part election. June, I think, 30, and July 7.
Okay.
We'll know a lot more. And one likelihood is he goes and does the Olympics opening the end of July.
That's right.
But is a different person.
Yeah, exactly. I mean, again, I was just focusing on the Olympics and how big it's going to be for France and for Paris. And
Katie Greifeld's going over there. She's taking Gus.
She's taking Gus?
Maybe he needs a horseback ride.
That is a big horse.
It is a big horse.
Boy, I see the pictures.
We'll see, but we'll have complete coverage. Caroline Conan leading a lot of our coverage in Paris for that. I played this song years ago, and I got not one, not two, but 3 emails from Paris. Thank you for playing this song. This is Francis Cabral, and he is the most American of the French singer-songwriters. This was a huge hit. Mr. Macron needs to know the world this morning.
L'enfant pour 5 francs la semaine vient broder des survêtements pour l'homme blanc qui golfe en voiture défendu. Le monde autour est sourd, bien entendu.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Michael Barr, Lisa Mateo, Amy Morris in for Lisa Mateo. We'll go to Washington here in a moment. I'm Tom Keene. Welcome on YouTube. Search Bloomberg Podcast. Subscribe to Bloomberg Podcast. A live chat here. I mean, we played a French song by Edith Piaf. I was going to play Edith Piaf, but I figured that would be too much. Thank you out of the YouTube live chat for that comment on our French moment. A French moment today, rumors, speculation that Mr. Macron may resign. That was quickly dashed by the Elysee, I guess is how you would call it. We have CPI Fed tomorrow. Anna Wong there just framing out. It's Derek Tang earlier framing out the dots.
Mm-hmm.
I guess we get dots tomorrow.
We get, DOTS on your Bloomberg terminal.
And we'll have to see from there. Let's get to it quickly. And we say good morning. Bloomberg Surveillance brought to you by CohnReznick. Advisory Assurance Tax. CohnReznick can help you improve business resilience through a comprehensive risk management solution. Visit CohnReznick.com. Futures negative 15. Apple wait. French wait. We're going to get to that with an esteemed guest in a moment. In Washington with our Bloomberg Business Flash, Amy Morris.
All right, thank you, Tom. Futures are lower. Traders positioning themselves ahead of this week's U.S. inflation data and Federal Reserve monetary policy decision. All of that coming down tomorrow. Well, today, futures are lower. S&P futures down 0.3%. NASDAQ futures down 0.3%. Dow futures down 0.4%. 10-year Treasury yield at 4.43% and the 2-year yield at 4.84%. NVIDIA shares trading higher now after dropping as much as 3.2% yesterday after its 10-for-1 stock split took effect. NVIDIA shares now on track to snap that 2-day losing streak. Shares are higher in the pre-market. European assets extended yesterday's losses as jitters over political upheaval in France continue. The euro now down 0.3% at 107.26 against the dollar. General Motors board approved a new authorization to repurchase up to $6 billion of the company's outstanding common stock. GM shares are higher in the pre-market. And that's your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Amy. Greatly appreciated. Joining us now, Alberto Gallo. I can't say it with the accent Paul has. Of Andromeda Capital Management, London. Absolutely definitive on the movements of price and yield worldwide, but particularly across Europe. As a child, he had the luxury of naval school in Venice. That's pretty cool.
That's pretty cool.
And the boat, when the tall ships craze was going, the coolest boat was the Amerigo Vespucci. Alberto Gallo, did you serve as like 17 years old on the Amerigo Vespucci?
It was a great time, actually. Yeah, thank you, Tom. Good morning from London.
And that's amazing. Yeah.
A long time ago.
It was a long time ago, but I mean, it was like the Darth Vader tall ship.
Yeah, exactly.
Came into Boston Harbor and it was like, whoa. Alberto Gatto, there's some dark clouds on the horizon for Macron. You've written about all of a sudden government and geopolitics is into the price of yield. Can that come over to the United States where we see in the U.S. to the election tension, which leads to lower price and higher yield?
So the consensus narrative for bonds very often has been, buy these yields because it's the last time you can get them and central banks are going to cut rates. And I think that's been wrong. We are in a different regime. We have a regime of persistent fiscal spending, persistent inflation. We continue to see, a good job market. We saw, pretty high NFP earlier last week, and probably, CPI will still be, year on year above 3%, 3.4, 3.5% for core and headline. So it takes a long time to run the last mile to make inflation go back to 2%. And then what you're getting globally is a round of extreme politics, which means more spending and also trade tariffs. So a Trump victory means inflation. And also in Europe, we're seeing, both in Germany and France and Italy already, pro-spending, extreme right governments or far right governments winning. And that's not going to go into austerity. These governments will spend more into 2025. So, there's been very little premium in the long end. Yield curves have been inverted, and we are seeing a bit of disinversion, which I think is overdue and might continue in the second half of the year.
So, Alberto, does that mean that this Federal Reserve can, sit on its hands a little bit here and wait for inflation to maybe come down, or should they be cutting right now, like some folks believe they should be?
So I think at best this year, the Fed is going to make one cut. This is what they can do, in my opinion. That's the maximum they can do, given that conditions in labor markets are still pretty good. They don't warrant more than one cut. But what I think investors are miscalculating in the rates market is the amount of cuts that will happen next year. And that's because everyone has been working on the same rate cut path of past cycles, which essentially tells you that once the central bank makes one cut, it's very likely to make another 2 or 3 or 4 cuts. However, there's 2 things that are different this time around. One is that the balance sheet is still very large, and the Fed has just tapered quantitative tightening. So the balance sheet is a measure of easing, and it's not coming down anymore. And the second is fiscal deficits are pro-cyclical. So the government, in the United States and in Europe, are spending even with very low levels of unemployment. They're spending way above average. So these 2 components compensate for higher front-end rates.
Alberto Gallo, are we fighting the last war? And we saw with Lagarde with a rate cut, and maybe there won't be another. But in the United States, do we just assume if we're going to go on trend in reverse, we have to be measured? Is measured dead?
I think that central banks have been so far really micromanaging volatility. They've changed their reaction function to make sure that there's not many shock waves in financial markets. And that's been easy because the supply shocks of the COVID crisis were coming down, and basically disinflation was also helped by immigration in the US and these one-off factors. But going forward, I think central banks will have to choose between micromanaging the volatility in financial markets versus managing inflation. So their job is going to be a little harder. The market right now, both stocks and credit, is in Goldilocks, so very low volatility, very low risk premium, high stocks, low credit spreads. And, we don't mind seeing some volatility here due to political risk premium and spending. I think it's healthy to see a bit of fear back in the market from a period of extreme low vol.
So, Alberto, I know you've spent most of your career in the fixed income space. So I guess the question for a lot of investors is, do they stick around in that 2-year treasury and get close to 5% return, or do they take credit risk? How are you thinking about credit markets these days?
So I would say, number one, we don't like duration. So we want to stay definitely below 5 years. We don't like the long end because of the risks mentioned before. Number two, we like credit. It's easy to be in the wrong parts of credit. There's a lot of consensus on investment grade. Investment grade doesn't give you a lot of spread right now. We're close to record lows. So you want to be in high yield, but you want to be in the right sectors. You don't want to be in private credit because that locks you for 5 years. And 10% today is the new 5% that we had yesterday. So it's not that much. We might get better entry points. And generally speaking, that's my third point. You want to be in real assets, because inflation will be persistent. So you want to have commodities, you want to have stocks, or generally companies that have cash flows that can reprice higher with inflation. Because we will be in a persistent inflation environment. So your paper return in government bonds at 4% in the long end is not going to cut it. It's not going to beat inflation over the medium term.
Very valuable. Alberto Gallo, thank you so much, of Andromeda Capital Management. Futures are negative 14, the VIX 13.13. Tomorrow, inflation report and the Fed. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Amy. Jury deliberations resume in about an hour in the criminal case against President Joe Biden's son over a 2018 gun purchase when prosecutors say Hunter Biden was in the middle of a crack cocaine addiction. Jurors deliberated for less than an hour yesterday. Hunter Biden's lawyers have argued that he did not consider himself an addict when he bought the gun. Secretary of State Antony Blinken is in Tel Aviv, seeing if Israel and Hamas can sign up to a temporary ceasefire deal for Gaza. Outside of Blinken's hotel, demonstrators are pushing for a plan that could eventually bring the remaining hostages home. Meanwhile, Blinken had a sit-down with the families of the remaining Americans held hostage in Gaza by Hamas. He pledged the State Department has been working nonstop on their safe return.
For me, all of the hostages, but especially our 8 American families who have loved ones in Gaza, we are determined to bring them home.
It comes as Secretary Blinken said Israeli Prime Minister Benjamin Netanyahu reaffirmed his commitment to a U.S. ceasefire proposal during a meeting in Jerusalem. 4 instructors from a college in Iowa have been stabbed during a visit to China. All 4 work at Cornell College and were reportedly stabbed in a public park in northeast China while visiting their partner school. China Foreign Ministry spokesman Lin Jian, speaking through a translator, says all of the victims are expected to survive.
All the injured were rushed to hospital and received proper medical treatment. None of them is in a critical condition.
China Foreign Ministry spokesman Lin Jian says investigators believe it is an isolated incident. The main shipping channel into Baltimore's port has fully reopened to its original depth and width following the March 26 collapse of the Francis Scott Key Bridge when a cargo ship crashed into it. It comes after a massive cleanup effort as crews remove an estimated 50,000 tons of steel and concrete. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Amy.
Thanks so much, Michael Barr. In hockey, Florida's walking away with it. Are the Celtics walking away with it? I mean,
even more so.
You want some tension. They're not getting it.
You're
right?
not going to get it, especially not in the Celtics matchup. I mean, it's too bad because, I mean, I'm happy the Mavericks made it there, but I'm not seeing anybody.
I'm not seeing anything from Kyrie, and that's disappointing because he had been so good all season. Kyrie Irving, Plainfield, New Jersey, 15 minutes at Duke University. But I haven't seen him in this finals here. Yeah. So it's been a little bit disappointing there, and yet the Celtics have been winning without like Jason Tatum going crazy, or they've been with some of the other guys. So
is there more focus on the halftime show with all this NBA tension coming up and Stephen A. Smith? I mean, there's one guy out there saying they got a minute and 20 seconds of time to analyze the first half.
That's about true.
I mean, but in the media and the Bloomberg Business of Sports, the halftime shows getting bigger scrutiny than the game, it seems.
Well, it's all about, how about Inside the NBA on TNT? That's been a staple of NBA television coverage for 30 years. And if Warner Brothers Discovery loses the contract, what happens to that show?
I mean, they're on next year. It's the year following.
On next year. That's exactly right. Exactly
but I got my fingers crossed because I love that show.
Yeah, so we'll see. They're trying to work out a fourth package, if you will, for the NBA. So we'll see if that plays out. But it just shows you everybody wants to have live sports in some way, shape, or form because that's
all that's left.
That's all that's left, I guess.
I mean, remember, we should be getting ready for is Gunsmoke on Thursday or is it on Wednesday?
Monday nights.
Yeah,
it's Monday nights this time.
Thank you.
And then I love the Here's Lucy comes up.
Oh boy, you guys.
Those days a bit gone. From New York, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Wall Street's most prominent trading desks, from JP Morgan Chase to Citigroup, now urging investors to prepare for a potential stock market jolt after U.S. consumer price data and the Fed rate decision. Both are expected for tomorrow. Futures are lower at this hour. S&P futures down 0.2%, NASDAQ futures down 0.2%, and Dow futures down 0.3%. The 10-year Treasury yield at 4.43%, and the 2-year yield at 4.84%. The wraps are off Apple's bid to play catch-up on artificial intelligence, including a partnership with ChatGPT maker OpenAI. It received a lukewarm reaction. Apple shares fall 1.9%. GameStop shares are lower in the pre-market after its share sale plan sparked a sell-off. Shares now down 3% for GameStop in the pre-market. And Bitcoin now down 3.6%. Analysts say there's plenty of inflow, just not enough to help boost Bitcoin's price. Bitcoin also waiting for tomorrow's eco data and that Fed decision, and it's waiting on tenterhooks. That's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Greatly appreciate it. Amy Morse in Washington. Futures is soggy, -12. The real yield, let's go to the yield space, Paul, 2.13%, and the inflation-adjusted yield, that pulls back a little bit. The Sweeney yield not to 5%, 4.84%.
We're getting there. I mean, why take credit risk?
Range bound?
When you can see, it feels like it.
Yeah, you know, have to see. It's tough. I mean, you're Pepperdine.
Yep.
And, you know, I mean, there's like rain once a year. You know, it's like perfect. Like USC. How do you go summa cum laude at USC?
I don't know.
You got to show up for class to do that.
Yeah, that would not happen.
Joining us now with parchment from USC, and distinguished at that, is Lauren Goodwin, Chief Strategist in New York Life as well. What was it like grinding and getting a deserved summa cum laude at USC? Were you the only one in class 5 days a week?
Well, they just hold class on the lawn, right?
Oh,
have to.
Economics on the lawn.
Really?
Really?
A whiteboard that rolls on wheels. I still have one in my office, actually. It's a signature trait.
They
of my
literally
team.
would roll a whiteboard out onto the lawn?
No, of course not. But I did take a
ISL.
skateboard to class.
You did
take a skateboard to class, Venice Beach.
I took a snow shovel, and I'm
Yeah.
lucky I got home. Lauren, thanks for being with us. You work for a venerable firm. We've done too much of the parlor game today on the Fed. Where's this Fed going to be in a year or in 6 months? Do they have a plan? Or are they literally making it up report to report?
I think that they're trying really hard to walk this tightrope between really where they sit right now, which is that the data are slowing. They believe they're restrictive, but they want to make sure that that doesn't turn into a policy mistake of being restrictive for too long. I think that the challenge that they face on the 6 to 12 month time horizon is that we're in a very capital intensive phase of economic activity that's related to artificial intelligence. It's related to electrification and infrastructure. This is a policy environment, but also a corporate spending environment that's constructive for economic activity, and that's going to be one where getting inflation closer to 2%, allowing them to pull rates back to 2.5% is just going to take time.
So there's a lot of folks out there in academia and in practice, in the marketplace, that are saying the Fed is missing the boat already. They need to be cutting rates now. What do you say to those folks?
I tend to agree on the idea of the pivot, that the time may be now for the pivot. And that's because we are seeing not the aggregate economy, but areas of interest rate sensitive sectors, areas of lower income consumers, businesses that use banks or floating rate credit to borrow. And that's been the case, that turning point has been taking place over the past couple of years. And so if we are looking to soft land the economy, I think the evidence is in that inflation is moving reliably downward. That's something that's been clear to me over the last 6 months. And so I do think that if the Fed were looking to extend the cycle, soon would be the time.
Bring your economics over to investment, a bond portfolio, an equity portfolio. Do you need to set your actuarial assumption higher because of higher for longer or because of a new reset in R start?
I believe that you do. Our star, I believe, has moved a bit higher as a result of this capital-intensive stage of economic growth that we're in. And that's an environment where, even in a traditional investor portfolio, investors may be missing the point in the transition point we're looking at.
Okay, so with an actual assumption, if you're popping 6% and you're telling me I have to go to 7%, that means I have to put more funding into my institutional or retail retirement account, right?
Yes, that's right.
This is a big deal.
I know.
I mean, this is the government's way behind on this. There should be increased levels in 401k, IRA, in pension and profit sharing.
The Sweeney offsprings are all maxing out on their 401k. I can guarantee you that. Lauren, I love your notes here. You give us some high conviction ideas here. You say that equity valuations are high. A lot of folks believe that. All right, what do I do? I'm not going to sell. What do I do here if I feel like equity valuations are high? What are my alternatives?
Look, I think that you have to stay invested. And so what I'm about to say is not sell off all your equity and put it into somewhere else. But I do think that we've seen considerable gains. And the average investor, if they had a 60-40 portfolio a year ago or 2 years ago, they don't have that now. And so if the question is, where do I put new money or where do I put those gains? I think that given where we are in the cycle and the strength that we've seen in the credit market, we've got an environment where those equity market gains may be better activated in fixed income and specifically in high yield. I think it's a sector that, while of course risks are rising for the market as a whole, you have an interesting high coupon. We're also seeing investors start to diversify their U.S. equity into international equity and move their cash into short duration fixed income to try to lock in the higher rates that we have. If you think the Fed cuts in September or December or even January, the next couple of months are historically the time to get in to capture those higher yields before the market starts to react.
You know, we've been talking, Tom and I have been this morning about Apple and AI. How do you guys think about AI? Is that something you invest? Do you just own NVIDIA and say, okay, I've got my AI trader? How do you guys think about that?
You know, this is something over the past year that we've taken a deep dive on, not just in the investment arm of our company, but also in the corporate insurance company, working together to understand what these trends might look like. There's a couple of ways to think about it. I think first, the areas of the market, the Magnificent Seven that have already seen gains from AI, it's going to be very difficult to displace these companies. That's because the cost, the barriers to entry of this foundational layer of technology are just very high. They're doing good work that people want. But it takes a lot of power and infrastructure to do those things. So we think there's a physical layer of artificial intelligence that can be invested in via equity, bonds, real estate. And in the future, it's going to be regulation and ethics that shape corporate use cases. We're not there yet.
I don't want you to get in trouble with the General Counsel of New York Life, but CRE is not getting fun. I mean, just in the last month, 30 days, it's really deteriorated. What's the fear level there?
You know, the fear level, I would say, is aware, but not fearful, if that makes sense. So a couple of things. First, when we look at a global real estate portfolio, we believe the bottom is in other parts of the world, including in Asia and in Europe, where office space is being used more. In the U.S., there's still price discovery happening. That's a lot of the news flow that we've seen.
Price discovery is called loss.
It's a lot of what we're seeing in the news over the past couple of weeks. But when we think about, you know, what do you do now? It is very likely that we're going to continue to see valuations written down, much in the way that's happened in brick and mortar retail over the last decade. I think that these write-downs continue over the next several years. But commercial real estate is diversified differently from office. I think regional banks are less allocated to real estate than is typically appreciated. And so this is a painful piece for investors in their portfolio across the board. It's going to take time to play out. But the systemic risk, all investors have their eye on that, so I'm not as concerned.
Okay, Lauren, thank you so much. Lauren Goodwin with us. New York Life. Futures at negative 15, Dow futures negative 141, and INVIX 13.15. Oil, haven't even mentioned it today. Brent crude is near an 82 print. 81.33. I mean, that's not where we were 5, 6, 7 days ago. It's rebound.
It's rebounded, Tom. I'm going to, from Matt Miller, I saw him walking by just recently. Bitcoin off 3.8%, just under $67,000 per token, Tom. So there might be a window for you there. Getting into
I'm looking for my first trade.
Yeah.
You know. I don't know how to spell Ethereum, but then I didn't know how to spell Bitcoin.
There's ETFs for all this stuff now, Tom. You don't even have to worry about it. Just go buy some spot
There's
ETFs.
not yet ETFs in Ethereum.
No,
did you see where Balchunas is?
Yeah.
He's doing a panel yesterday at the Louvre in Paris.
Exactly. He's not. We're not going to
What's
see
our problem? We don't have a life.
No.
We got to be more like Eric
Balchunas.
Balchunas, ETF God. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And from the Bloomberg Interactive Broker Studio, I'm Amy Morris. Wall Street's most prominent trading desks, from J.P. Morgan Chase to Citigroup, are urging investors to buckle up for a potential stock market jolt tomorrow after U.S. consumer price data and the Fed rate decision both come out. Futures are lower at this hour. S&P futures down 0.3%, NASDAQ futures down 0.2%, and the Dow futures down 0.4%. 10-year Treasury yield at 4.43%, the 2-year yield at 4.84%. And because Tom and Paul were just talking about it, NYMEX crude oil down 0.4% or 32 cents, now trading at $77.43 a barrel. Brent crude down 0.3% or 23 cents, trading at $81.40 a barrel. And the spread between French and German 10-year bond yields,
listen to you,
as much as 66 basis points, the widest since March of 2020 on a closing basis. The euro now down 0.3% at 107.29 against the dollar. Market making powerhouse Citadel Securities started electronic trading of euro and sterling interest rate swaps. It's expanding into European rates now. The firm's set to boost its swaps offering with full-boast trading capabilities next month. That's your Bloomberg Business Flash. Tom and Paul.
Amy, when you were at BU watching BU hockey, were you worried about the French-German spread?
You'd be surprised.
It's just amazing. We're all watching this. Basically, folks, when you get the tension in politics like this, everybody bases back to Germany. There's some other oddities like the, believe it or not, Swiss-Hungarian spread, which is a mortgage indicator of tension in Eastern Europe. But it goes, this is what we do. And Amy, was she? I think she's better than Lisa there.
Well, I don't know.
It's real competition. Tough. Amy
They're
Morris,
all good.
thank
All
you.
good.
So much. This is an honor, I should say, with our economic indicators. Big economic day tomorrow. Economic indicators, always, each day, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn more about their consultative support, and technology. Thank you, Commonwealth, for your support. This is a joy. He is definitive in the world on use of gold. James Steele joins now from HSBC. Really honored to have you in our studios. If we were to walk not near our offices by the Ritz-Carlton in Dubai, where Jumana Bertecci holds court, but if we were to go down by the canal in the old historic souks, where all of the Indian Ocean, all of Eurasia buys gold, what would be the mood in the souks of Dubai?
Well, first of all, thank you for having me, Tom. It's a real pleasure. I think one of restraint. And now that we've seen such a big price rises, what has resonated through the physical side of things, and that's not hedge funds, that's not asset managers, portfolio managers, that's the people on the ground, rich and poor, buying gold. There's been a pullback. Bar demand is down, physical coin demand is down. We know that because the premiums have come in. All the major mints are reporting somewhat lower demand, with the exception of the Royal Mint, which has been a function of the election. So there's triggered a demand for bars and coins, which we tend to see if it ever looks in a democracy that the center-left are going to win. There tends to be an increase in gold demand. But other than that, there's been a pullback.
I got to ask the question of the day. Is Fort Knox still like Goldfinger? Is Fort Knox still where we keep all our gold?
This is where we keep our gold in the United States, and it has, to my knowledge, about 30,000 highly trained troops guarding it.
So it's like Goldfinger still.
It is there, and it's the country's gold.
It's like, is a bar of gold sat at Fort Knox for like 60 years, or dare I say 100 years?
It's been there a long time.
They're not the bar of gold at Fort Knox is not at Costco.
Yeah, exactly.
Gold goes where the money goes, and in the interwar and post-war period, it came to the United States, out of Europe. In the 70s, it went from the advanced countries to the Middle East with oil, and now it's going to Asia. So and this is true for the last 2,000 years. Gold has followed where the money goes.
Okay, talk to us about China. Can you tell us, just give us a sense of demand for gold in China? That's what I've heard. I don't know anything about the gold business, but they say China. What's China mean for gold demand? Who's buying gold?
Well, I think you have to break it down into two components. One is central bank demand, the demand from the People's Bank of China, which, like all central bank demand, not just theirs, is somewhat opaque, and we never get timely information, generally speaking, and also the demand outside of the People's Bank. Now, the demand outside of the People's Bank has been very good, but it's not necessarily because they're such devotees of gold. The property market is down, the equity markets are down, and most people in China don't quite have the same suite of investments, even at the most sophisticated end, at the professional investor end that we do, or British or American hedge funds have, et cetera, et cetera. So when both those things are down, gold is a winner by default.
Okay.
And that's what we've seen.
That's what we've seen.
I don't necessarily think it's because of a mad love affair with gold. And I suspect that when or if, I suppose when is more the question, the property market stabilizes, the equity markets there stabilize, we'll get gold underfunded. Now the central bank buying is very different. And that's government buying. Now, they reported, you might have noticed the pullback in gold a few days ago, last week. Well, they reported unchanged gold reserves for the previous month. That did not mean that they've stopped buying. It just meant that they didn't buy that month. And that was misinterpreted, I think, by the market.
Okay.
And we got a very abrupt decline of $79 that day.
Right.
But it wasn't a policy statement.
Okay.
They just said, our gold reserves at the end of May were the same as they were at the end of April. And they had been accumulating gold every month for the previous 18 months.
Okay. So how about silver? Do we think about silver differently? Because that's up 24% this year. Is that just rising tides lifting all boats for silver? Or is there a specific
We do
case
tend
for
to
silver?
get a gold-silver ratio that people will trade. And I remember in the old days down at the World Trade Center when I worked on the COMEX, when it was called that, I would see people look over at the silver booth and then back to the gold, and they would trade. Right? That's exactly how it used to work. So the silver market's considerably less voluminous than the gold market, and so when you get a big move in gold, you generally get silver lifted. Now, the big difference between the two is that over 50%, something like we estimate about 57, 58% of silver demand is not for bars or jewelry or coins the way it is for gold.
Industrial.
It's industrial,
Yeah,
exactly.
yeah.
Wow.
And everything, now even though we forecast a rather sluggish industrial production growth this year, everything you need silver for is growing at an above rate. So we think the silver demand, industrial demand, is moving at twice the rate of underlying industrial growth.
There's a book that is like James Steele wrote the screenplay. It is William Silber, definitive on 1914 when we took the gold standard from Britain. He literally describes the boat coming across the ocean where McAdoo said it's our time and we became dominant. There's a fear out there, James Steele, that someday there's going to be a boat to China where they steal the gold standard from us. They steal dollar sovereignty from us. How do you respond to that?
Well, I think there's enough room for everybody. The United States is an enormously large economy. But I think what you're touching on is maybe this issue of dollar de-dollarization. And that's been ascribed to some of the reasons that central banks, not just China, have been buying gold. So now, we don't believe that there's going to be any loss of sovereignty for the US dollar as far as the world's reserve currency goes for the next 10, 20 years, as far as we can see, for reasons that would take an entire program. You and I could talk about it. But that's not to say that every single central bank in the world wants as many dollars as they do have. They may want to reduce their reserves by, say, 65% to 62%. So what do you do with that 3%? Well, they're very limited as to what they can buy, both in fixed income and for currencies. And there may be a reason that they wouldn't want to buy the euro or the yen. And gold provides a perfect sweet spot of getting out of the dollar without going into something else.
Well, this is right where I wanted to go. It's like you read my script. Dennis Gartman, very different from James Steele, has nailed gold up, but he's also nailed it gold up in Japanese yen. And it's shocking what Gartman predicts if Japan doesn't get their act together and you don't see strong yen, you see continued weak yen. Is there a linkage between James Steele's world of gold and currency that signals a huge opportunity in your opinion?
Well, I think, much of that is the currency play as well.
Yeah, it's currency
play. And exactly. And
we'll take it over to Darragh Meyer. I mean, you guys are on speaking terms, right?
I haven't spoken in a while, but we have done, I think. I can't remember when.
Talks daily to Steve Major, but Darragh Meyer, forget it.
But they're both brilliant analysts. I want to go on record as saying. And that's what we've seen. That's one of the reasons that the physical demand for gold has weakened. if not only has gold gone up, but in rupee terms, for example, it's enormously expensive. So yes, gold would be high in Japanese terms if the yen were to weaken.
Paul,
but that's almost, I don't want to quite say sophistry, but it's getting on for.
We could say sophistry and surveillance. I don't know how to spell it. But
I believe you're a
Paul,
victim
get
of the
one more
Jesuits, Tom.
Exactly. Jim, GLCO, the Global Commodities Monitor, that's all I know about your business, commodities business. What's the trade that people want to talk to you most about these days?
Well, trying to figure out gold.
Okay.
One of the interesting things is that I've just come back from Europe, and both in Europe and North America, the previous rallies have had a clear smoking gun. This one hasn't so much.
Right.
And that's what makes it so interesting, because it's a couple of things. There's geopolitics going on as well. Yeah. And one thing I just want to mention, and why it's so influential, is that you can come to me and you can say, Jim, what happens to gold usually when the Fed cuts by 50 basis points or when it increases? Or when the dollar goes up this much or down this much? But Gaza is different from Ukraine, is different from the South China Sea, is different from the Taiwan Straits. And so every geopolitical event may have a different impact on gold. You can't model it.
40 seconds left here. I'm asking for a friend. What's the markup on gold at a fancy store on 57th Street like Tiffany?
It's very, very high. It's hundreds
Oh,
of percent.
thank you. It's good to know that. What did you just say? 100? They do a double on it?
Hundreds of percent. But
Hundreds,
you're paying,
plural.
Well, you're paying for the artistry, and you're paying for the workmanship.
You're not paying for the blue box.
You're paying for that too. But I mean, and it's well worth it. It hasn't dimmed the demand at the high end.
You're not supposed to.
But it's
say
one of the
that.
reasons
She's
that
listening.
the gold price doesn't change. And so,
she's
whereas
listening.
in Asia, you'll see that the markup is very low, and the prices change rapidly in the shops.
Interesting. This has been a pleasure. Please come in again.
Thank you, Tom. Thank you for having me.
James Steele, without question, the definitive guy on fundamental gold around this world, from the Canal of Dubai to Asia to Fort Knox. I saw Goldfinger like a while back. What a great movie still.
I've never been there.
I've never been there.
Can anybody?
I tried to play a concert there. They would let me in.
I was going to say, but I thought it would be a party political broadcast. Our vault is the second biggest vault in the American continent after Fort Knox.
Who's your HSBC?
Yes.
Wow.
Well, excuse me. Can I ask, where is the HSBC vault?
Yes, 452 Fifth Avenue. I could have taken you into it a couple of years
Bar's
ago.
taking notes. Thank you, James.
Yeah.
For that. Always great. James Steele, thank you so much. Huge comments for James Steele, as there should be. And it was nice to Steve Major and Dara Mayer. It's amazing. It's just it's a beautiful day. Futures at -14, Dow futures -132. There's some Apple noise there. There's also a little bit of Apple intelligence noise as well. From New York City, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Investor demand for Haven assets rose. Unease over political upheaval in Europe intensified, and U.S. Treasuries gained before inflation data and the Federal Reserve's interest rate decision. All of that's tomorrow. Gold now 0.4% higher, or $8.70, now trading at $23.36 per ounce. Futures are lower. S&P down 0.2%, NASDAQ down 0.2%, the Dow down 0.3%, the 10-year Treasury yield at 4.43%, the 2-year at 4.84%. Eli Lilly shares are higher and pre-market. The Food and Drug Administration giving its backing late yesterday for a new Alzheimer's treatment by Eli Lilly. Shares are up now 2% in the pre-market. And Apple's AI for the rest of us plans getting lukewarm reaction. Shares declining as much as 0.7% in the pre-market. Apple shares down now 2%. That is your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Greatly, greatly appreciated it. Amy Morris in Washington this morning. Futures -13. Bloomberg Surveillance, always brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. We get lucky. This is incredibly well timed. Just to have James Steele in on gold and do the same guy. And I'm going to describe the picture for you. And this is what Howard Lutnick did at Cantor Fitzgerald, is he created a business on lesser capital than the ginormous amount of capital you'd see at most firms. I'm not smart enough to know if Mr. Lutnick invented that, but Cantor Fitzgerald did that. At Reagan Capital is Skylar Winand, who joins us now, their chief investment officer. And I got to go to your wheelhouse at Cantor, where you were legendary, which is asset-backed securities, synthetics and derivatives. When you look at commercial real estate, what's it doing through the prism of the trenches of Cantor Fitzgerald years ago, how worried are you about that creeping over into other debt spaces?
I'm scared about commercial real estate, that's for sure. I'm not scared that it creeps into residential home loans or asset-backed or student loans. Commercial real estate, it's good until it's not. And you don't know, you have 5-year, 10-year leases, and that borrower can say, all right, I'm gone. And if you look at where Nomura is based over in West Midtown, that entire building is going vacant because folks are moving over to Hudson Yards. Okay. And you don't know until the last minute that that borrower is not going to pay you anymore. That's the problem with commercial real estate and CMBS.
So where are we going to see the weakness in the securities market, the mortgage-backed securities markets or asset-backed securities market from commercial real estate? Because we have a lot of half-empty buildings here in Manhattan and in Boston and in San Francisco, and maybe not so much in Dallas where you are. Where are we going to see that?
Definitely directly in CMBS, but that'll translate as well into banks. We saw the news, what PIMCO came out with this morning, saying there's going to be a lot of pain where commercial real estate's really based in small community banks. So there might be bank securities, bank equities. There's an old, it's called trust preferred securities, bank subdebt. And so you're talking about some real pain.
What you call that? Bank subdebt?
Trust preferred. It's bank subdebt, second lien bank debt. Wow. This crazy, notion.
It's like a flashback to Cantor Fitzgerald.
Exactly.
Here, 14 tranches beneath. Paul, save the interview.
So, Skylar, as you sit back with your firm, where do you see opportunities right now? Where are you deploying capital these days?
We love the $12 trillion mortgage-backed security market.
Okay.
U.S. real estate's at $45 trillion. But homeowners have a ton of home equity. Yep. They have 55% home equity nationwide. And so you have, A, borrowers have been paying down their home loans. B, obviously home prices are up 40+% in the last 4 to 5 years. So tons of home equity. We love old, they call them legacy mortgage bonds from 07 and earlier. Okay. So I've been trading the same stuff, no joke, since 2005.
Right.
And I thought this market was going to die. It's always been a 5-year trade. Now, nobody's prepaying. Okay, so you have the ability to buy these bonds at 50, 60 cents on the dollar at an 8% yield with tremendous upside.
8% yield to maturity.
Exactly.
Not a coupon.
So if borrowers do prepay tomorrow or in a year from now, which is what they were doing 3 years ago, these are 20% yield securities. But you're buying them assuming that nobody's ever going to prepay.
Amy Morris is taking notes in Washington on this. The fundamental call for Reagan Capital, and this is like Lindsay Pieggs at Stifel, is you guys are looking for higher yields. I mean, everybody else is, we believe price up, yield down. And you're going, no. Why?
The consumer's hurting. We have a very bifurcated economy. And what's really hurting consumers is inflation and prices. What will bring that down is higher interest rates. There needs to be a little bit more pain in commercial real estate, at banks, high yield corporations, anybody that's levered. There needs to be a little bit more pain in order for prices to come down. Okay? In order for that to happen, rates need to go up. And the curve is deeply inverted still. It's been inverted for the last 2 years. Folks that are calling for, hey, go out and buy fixed rate paper. No, buy floating rate paper. Stay on the front end of the curve that's yielding 540. Get an extra 1, 2, 3 percentage points off of that front end of the curve and wait for the curve to normalize. You aren't going to lose any money sitting at the front end of the curve in floating rate paper.
So do I take from your comments that you think the Fed will hike rates? Or that rates will just stay where they are?
I think they'll stay where they are. And what we're seeing is the back end, because a lot of foreign buyers are leaving the market, liquidity stinks right now. I hope that back end flattens out and normalizes. That will actually allow the Fed to then potentially cut rates in, let's say, a year from now.
If we get the Skylar Winan bond market, we're just farther away from a recovery over 5 or 10 years in bonds. Do you see us ever getting back to price up, yield down, as we saw with the Great Moderation? Or is it just
I hope
that's
not.
ancient history?
I hope we don't get back to 1 or 2%.
But I want to refinance my mortgage, dude.
Me too. I get a rate reset coming up in a month or so, and my coupon's going from 4 to 7.5%. And so I'm like, wow, this hurts.
Yep.
Maybe I got to sell my property. So we're back to normal. The last 15, 20 years was not normal. We're back to normal. And if I'm sitting in Jay Powell's seat, I want rates to be at 5. That gives me a ton of leeway to maneuver if there's another calamity.
So what do you think we're going to hear tomorrow from Jay Powell?
Nothing.
Nothing.
We're going to wait and see. We're going to look at data. We're going to wait for things to percolate, whether it's from inflation going higher, unemployment going higher. That unemployment report last week did not help their situation. And we're going to wait. And we're just going to kick the can down the road another month until, the next meeting.
If the cash unwinds, if the yield comes in quickly here, if the cash unwinds, where does that money flow?
Potentially bullish on equities, right? Let's just buy more, risk on.
Right.
And, debt's really cheap. Bonds are at, you can close your eyes and make 5.5%, 6% yield on really high quality paper. Okay. And if you do a little bit of work, you can put together a portfolio that's yielding 8 to 9 with upside.
Don't be a stranger. Skylar Winan, thank you so much. CIO Reagan Capital, just brilliant there. And
they're down in the Crescent Court, Tom, in Dallas, and that's where all the smart people are in
yeah.
Dallas.
Well, the stock exchange is moving there.
Buildings. They're right across from each other.
You see that Michael Dell's moving the New York Stock Exchange to
okay. All right.
Texas?
I don't get it. This whole Dallas thing.
Well, there's a list of companies that will go right away. ExxonMobil and the Dallas Cowboys.
Everybody's going to Dallas.
Well, that talks to country and Western. How about one song that made an artist? This song didn't even chart. It got the number 14. It was like, nothing. Okay. But when everybody heard it, they're like, are you kidding me? Who is this person? Casey Musgraves. This was the first song out of the box. Good morning. Stay with us. Great hour coming up.
Brothers hooked on Mary Jane, and Daddy's hooked on Mary 2 doors down. Mary, Mary, quack and Sherry, we get bored so we get married. And just like dust, we settle in this town.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. We have surveillance intelligence this morning. I liked it, AI and all that.
Yep.
And it's like, duh, call it
Exactly,
Apple Intelligence.
right?
Probably they had to get 45 people to come up with that concept.
I thought Siri was AI, so I don't know.
I never did it. Do you do Siri?
I do Siri. I do Alexa.
You like have I turn it off the moment I get it?
I don't know. I will see.
You do the thing in the house. You're in your living room and go,
Alexa,
order me Budweiser?
Yeah, absolutely. In cans, please.
Really?
Yes.
I won't let it in the house. I'm
Yeah,
scared stiff of it.
Yeah, who knows what it's doing to us, but he and she are in the
Has
house.
it ever done like a he or she, has it ever done like a false order or something?
No, I don't think so.
You're
not that I know
screaming
of.
that we're out of
Yeah.
peas or corn.
It's like,
and-
Alexa, where's my Budweiser in cans? Where's the delivery?
Okay.
En route. It'll be there tomorrow.
Okay, technology with
Yeah.
Paul Sweeney. It's very good. Let's go to the Fed meeting tomorrow. All of a sudden, I guess they're going to do it, and it's all about the dots. It's all about the look forward. And it must be a contentious debate.
And on the Bloomberg terminal, DOTS, you can see where the dot plot is there, and that'll be widely used function on Bloomberg terminal tomorrow.
Good morning, all on YouTube. Subscribe to Bloomberg Podcast. Search Bloomberg Podcast. On Apple CarPlay, I kept waiting. I watched 16 minutes of this thing before I turned it off. And the answer is I kept waiting for an Apple CarPlay update, but there's going to be one. They've announced that.
Yeah, it's all good. I think it's people use
Apple
I use
Intelligence
It. Super
is-
easy to use.
Yeah, that's all there is to it.
Yeah.
Was James Steele cool?
Very
Talking
cool,
about
very
Fort
cool.
Knox and Goldfinger.
No, now I want to see the
Huge
vault at
response.
HSBC here in Manhattan.
Yeah, maybe we could do a live remote.
Yeah, exactly, from the vault.
From the Gold Vault as well. We say again, good morning to all of you. Lisa Mateo on assignment in Atlanta. With our news in Washington, our Bloomberg Business Flash, Amy Morris.
Hi, guys, and you are absolutely right. Everybody is waiting for tomorrow's Fed latest policy decision for the month of June. In addition, we get a final read on consumer prices for tomorrow. So markets are in a bit of a wait-and-see mode ahead of what we're looking at as a possible economic double whammy. The S&P futures are down 0.3%. NASDAQ futures down 0.3%. Dow futures down 0.4%. The 10-year Treasury yield at 4.45%, and the 2-year yield at 4.84%. NVIDIA shares trading higher after dropping as much as 3.2% yesterday after its 10-for-1 stock split took effect. NVIDIA shares on track to snap a 2-day losing streak, and European assets extended yesterday's losses because of jitters over political upheaval in France. Continuing, the euro now down 0.3% at 107.32 against the dollar. That's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. One of the treasures of Bloomberg Radio and all that we're doing on digital is Nancy Lyons, acclaimed for her coverage of September 11th. She won the Edward R. Murrow Award that year in broadcast. Really treasures. And she's got our Farm Journal report this morning.
Big.
Amy Morris, help us out here. I guess this is the road to Dulles, and there's ducks in the HOV lane.
Yeah, Nancy just stuck her head in the studio and said, I'm running late because there were geese. Geese had taken over the HOV lane. And I was like, wow, I love summer in D.C.
Can you imagine what it would cost for the government to intrude on the geese crossing the HOV lane?
Oh, yeah.
to us?
Congestion pricing.
Thank you for the Farm Journal report. Amy Morris in Washington, Nancy Lyons as well. It's going to be interesting to say the least. What do we got here coming up here? This technology?
Analysis.
Why don't you bring in Ari Wald? I mean,
Absolutely.
support, resistance. I don't know where they are.
Ari Wald joins us here. He's head of technical analysis at Oppenheimer. And Ari, I have to be honest, the only technical analysis I do is I type in the RSI function for the S&P 500. And when it gets up to 70, I say, oh, looks like the market's approaching overbought. And when it gets down to 30, it's oversold. We're here at 65 and change here. How do the smart technical analysts look at this market today, Ari?
We keep it very simple. We see a chart going from the lower left to the upper right. We say that's an uptrend, and we expect it to continue. And that's the action that's at play right here. S&P 500 NASDAQ 100 as well, coming off new cycle highs. Bull market since October 2022, intact how we see it, confirmed by market breadth, what we're seeing in volatility, and global markets as well. So tactically, we could be reaching some of those overbought thresholds from a very near-term basis, but the longer-term trends indicate to buy pullbacks in anticipation for higher highs.
I don't hear the word rotation, Ari, like I did years ago. Are you seeing in the charts on a sector basis traditional rotation, or is this time different?
There's been some subtle rotation developing. I think the key theme here has been offense over defense. Now, we've seen this ongoing leadership by large cap growth and the NASDAQ 100. I think it's notable that on a relative basis, that index has actually paused for a lot of the last 6 months, and I think is now repositioned for a breakout to new relative highs. But as we think about the underperformance in value, I think the subtlety here is that cyclical value is still outperforming defensive value. And that is the key kind of leadership trend that we see developing. And I think with that, one group will pause, another one will take over the leadership baton. But at the same time, we're seeing all these kind of groups work in absolute terms, but on a relative basis, it's still a generally offensive over defensive theme.
Ari, we've seen, really over the last couple of decades, a growth in programmatic trading, algorithmic trading. Does that impact technical analysis? Does that impact kind of the data?
It's a really important question.
Does that impact the data you see?
It affects the very short-term trading signals. If you don't pounce on a particular signal imminently, it could be exhausted, 2 or 3 days later. What it has not affected are the long-term trends. The long-term trends have not changed through the increase in algorithmic trading. And so while I feel a lot of our clients' time horizons have come in, ours have expanded. And I think it's more important than ever to kind of take a step back and key on those, those intermediate term trends looking out 3 to 6 months.
Well, let me follow on from Paul's brilliant question. I mean, in the old days, Ari, you probably grew up like I did. You had family members charting individual stocks. We were disciples of point and figure charting, which we won't go into now, take too long. But the answer is people were engaged in individual stocks. And now it's all ETFs. What else, Paul? It's all gamma.
Yeah, sure.
Memes and all that. Is technical analysis in retreat?
Quite the opposite. More important than ever. It's less so who's going to have better fundamentals between big bank X and big bank Y, and more important, do I want to buy the technology spider or the financial spider? Because you're really seeing all these groups trade together because that's where the trading has been in these ETFs. And so it's really the importance of top down has become more important. Bottom up, always, of course, always a place for that. But now you really have to emphasize the top down, getting you into the right ballpark and keying on those cycles at play. I don't care how good the fundamentals might be. If the energy sector is coming in, all those energy stocks are going to come in with it.
Ari, from a technical perspective, what are maybe some of the sectors that are screening well for you guys these days?
Of course. So we are momentum investors that overlay technical analysis on top of our process. As we think about momentum, we generally think about strong relative returns over a prior 12-month period. And for us, it is a mix of both growth and, again, cyclical value. I think in terms of technology, we continue to argue that the steadiness of the gains we've seen in years is actually underappreciated, that this is a group that should remain a driver of the market's secular advance. With that said, financials also screen well for us. A lot of the capital market stocks, brokers, private equity names that had a great day yesterday. And on the industrial side, infrastructure, which has really been perhaps the key leadership theme since the start of the bull market in 2022 on an equal weighted basis, has just been unrelenting steadiness. And I think that remains a driver of outperformance too.
Great brief. Ari Wald, thank you so much. With OPCO, with Oppenheimer there, head of technical analysis. Love doing the charts. We don't do enough of that. Charts work on radio.
You had Luis Yamada in last
we
week, right? Yep.
had the
One of
legend
greats.
in, Louise
Yep.
Yamada. She was dazzling.
Yep.
Thank you so much, Ms. Yamada, for coming in, if you're listening.
And her predecessor at Smith Barney was Alan Shaw. That's the
Yes,
first time
who
I came into
tragically
contact.
died here recently, and he was hugely influential.
Yeah, he was the one that
hugely influential in the efforts that I made. Futures at -14. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Amy. Jury deliberations are resuming now in Hunter Biden's federal gun trial. President Joe Biden's son has pleaded not guilty to allegations that he lied about his drug use when he bought a gun in 2018. Prosecutors used Hunter Biden's own voice from his memoir and text messages to loved ones to try to prove that he was in the throes of addiction. He told his brother's widow, Hallie, who he had a romantic relationship with, that he was, quote, sleeping on a car smoking crack. The defense shot back that this was a lie told by Hunter as an excuse to avoid seeing her. Secretary of State Antony Blinken says the UN Security Council's vote in favor of a U.S.-backed proposal for a ceasefire in Gaza has made it as clear as possible could be that the world supports the plan. He again called on Hamas to accept it and said Prime Minister Benjamin Netanyahu had reaffirmed his commitment to the proposal. Blinken spoke today during his latest visit to the region, his 8th since Hamas's October 7th attack ignited the war. Blinken met with the families of the American hostages in Gaza.
They were elated at the rescue of 4 hostages just a couple of days ago, but they continue to feel deeply, powerfully, this enduring separation from their loved ones.
Hamas also welcomed the Security Council vote. Malawi's vice president has been killed in a plane crash. In a somber address to the nation, President Lazarus Chakwera said the aircraft carrying 9 other people had been completely destroyed.
Despite the track record of the aircraft and the experience of the crew, something terrible went wrong with that aircraft on its flight back to Lilongwe, sending it crashing down and killing everyone on board.
That includes Vice President Saulos Chilima, who also died. Those on board were traveling to attend the funeral of a former government minister. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Amy.
In page 42 of my agreement, 148-page agreement,
Yep.
it says every 6 weeks, like clockwork, I'm forced to talk about the dreaded New York Yankees with Paul Sweeney and Michael Barr. Are they as good as 1927? My answer is, given the competition, yes.
Yeah.
It's amazing.
They look very good. I would say as good as back in the old Reggie Jackson day, when they were throwing money out there on the field.
Yeah.
Yeah, they look very good.
Soto gets hurt, and so Aaron Judge says, okay, I'll play better.
Yep.
I mean, it's just like that.
26 games above 500.
Yeah.
Just extraordinary. And again, in the recent memory, 1998, a lot of folks feel like that was one of the better Yankee teams of all time. And, they're kind of on that pace here. And we haven't had Garrett Cole, the ace of the staff, hasn't pitched all year.
Rodon, who I adored at the San Francisco Giants, I adored him, and he's like on a career year.
They all are.
After injury.
They all are.
Yeah, they look great. I mean, you have to admit
So
it.
free agency,
But so the
they
Orioles
have
are right
to,
there, though, Tom. They're only a couple of games behind the Yankees.
Yeah,
As
well,
great as they're playing our good friends, I think we know.
Very
some of them.
nice
Yep.
comment there.
Yep.
I mean, save the show there.
Yep, exactly.
Look at Baltimore as well.
Yep.
Sweeney up to speed on
Knows who-
the Baltimore Orioles.
Go O's.
Good morning, everyone, from New York City. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Amy Morris, and futures are lower ahead of the opening bell. Traders positioning themselves ahead of this week's U.S. inflation data and Federal Reserve monetary policy decision due out tomorrow. S&P futures down 0.2%, NASDAQ futures down 0.3%, and Dow futures down 0.3%. The 10-year Treasury yield at 4.45%, the 2-year yield at 4.85%. General Motors authorized a new $6 billion share buyback plan as improving profitability in its primary business and growth in electric vehicles, allowing the automaker to return cash to investors. Bitcoin now 3.5% lower. Analysts saying there's plenty of inflow, but not enough to boost the price. Bitcoin also, by the way, waiting for tomorrow's eco data and Fed decision. That's your Bloomberg Business Flash. Tom and Paul.
Amy, thanks so much. Amy, thank you so much for the effort today. Lisa Mateo on assignment for Bloomberg LP, talking to people that use the Bloomberg Professional Service, the Bloomberg Terminal. She's down in Atlanta.
Yep.
I can't remember the breakfast place, but, pimento omelets.
I guarantee it's on Peachtree Street.
Something
street
like
that.
that. This is a joy. In studios with us right now is a Texas woman out of Rice University and Texas A&M, Victoria Fernandez. Just this brilliant work on the pressure. She's with Crossmark Global on what do I do with my money, particularly what do I do with my money when I'm worried. And we're going to talk about that, but I first got to ask, there's no other story to talk about as well. I'm going to editorialize. Michael Dell is moving the New York Stock Exchange to your Texas. What was your thought when you heard that they were going to build a stock exchange in your Texas?
Yeah, I was a little surprised, Tom. I wasn't expecting to read that headline, but look, a lot of people are moving to Texas. It's a great place to be. You see a lot of businesses moving there, so why not have an exchange there as well? I mean, I wish they were going to move it to Houston instead of Dallas, but it's okay. We'll let them have that.
Well, I mean, within this, like ExxonMobil, do you just presume they'll be listed on the New York Stock Exchange and listed on the Michael Dell Stock Exchange?
You assume there's going to be a lot of double listings going on. I don't know exactly what the rules are going to be around that, but I would assume you're going to have a very large exposure to oil and gas in a Texas exchange.
Is this a symbol of a bull market?
I don't know if I would go that far to say it's a bull market. You know, a couple weeks ago, Jamie Dimon said he was cautiously pessimistic, and I kind of like that phrase. You know that we've been cautious for quite a while on this market because there had been so many red flags to us that it couldn't continue. But look, you don't want to stand in the way of this momentum and the trend that's there right now. So, as you know, when we talk to our clients, stay invested, but we have to be cautious.
Paul, when you look at the angst here, Apple Intelligence and all that, can we review the closing levels yesterday? 5360, SPX all-time high.
Yeah.
19,000 NASDAQ, and we're down from Dow 40,000, but 38,800, almost 900 on the Dow.
It gets your attention. So, Victoria, some of those levels there, do we have to be concerned about valuation? How do you guys think about valuation in the equity markets these days?
Yeah, so we think of it as being a little bit rich. Anytime you're at this 20-21 times forward earnings, that tells you you've got to take a step back and see what's driving that. We actually think earnings are not going to have 2 years of double-digit growth. We've never had that without having a recession associated with it. So we would be cautious there, but there's even talk of this moving up to 23, 24 times forward valuation if the Fed starts cutting rates and you get a melt up in the stock market. That would be our biggest concern, is that you would have that valuation move even higher.
How about in fixed income here? I mean, nervous Nellies like me, I might just sit in my 2-year United States government security and get close to 5%. Is that a trade, or do I take some credit risk?
And you know what, Paul? There is nothing wrong with that. We are happy telling our clients, take a little bit of that risk off the table and put it in short-term fixed income. It allows you to generate that cash flow that you need. But because yields will probably come down over the next couple of years, it makes a lot of sense to put some of that money to work further out the curve. I would stick with investment grade. High yield obviously is that canary in the coal mine many times as we see the economy starting to come down. So we would stick with high quality investment grade there.
I got to talk about Texas. We've got Victoria Fernandez in her studios today. And usually it's remote and she's worried about the cat, the dog, it's just not. She's giving a pecan. It's like the pancake pantry at Nashville. She has pecan pancakes every morning. That's what you do in Dallas, Fort Worth, and Houston. State sales tax revenue for Texas was near $4 billion in a month. The unemployment rate, 4%. Okay, big deal. They've added 306,000 jobs in the last year. What's the distinction you see in the Texas boom?
Well, I think many people thought of us as only an oil and gas state. And we have a lot of diversification in our economy. You've seen a lot of software and tech companies come in as well, like you mentioned a little bit earlier. So there's a broadening of the types of jobs that we have. We have really strong schools as well. So we have a strong workforce. And look at how many people moved into Texas during COVID. So that's generating more tax revenue for the state.
Yeah, but can I turn left in Austin? I mean, basically, is the infrastructure keeping up?
Look, infrastructure is an issue, right? And so everywhere you go in Texas right now, it's under construction. The highways are there. So they're trying to catch up. It's tough to do. But I think we're going to continue to grow because of the tax advantages that corporations can have there. And we're great people. Come on, Tom, if you want to come there.
We got to go down there. How about like Houston? You talked about the diversification, but when I think of energy, I think of Houston. And I think of Houston, I think of energy. Talk to us about just the city of Houston, what's going on there these days?
Yeah, so also Houston, besides the oil and gas and the energy component, it's a huge healthcare city as well. We have the Texas Medical Center. It's one of the biggest, most prominent in the country. So there's a lot of healthcare that goes on there as well, a lot of education. We have a lot of high quality, Rice University is there. Go Owls. So
Owls? We're the Fighting Owls?
We are the Owls.
Okay, awesome.
Yes, we are.
Legit baseball team.
I know they are.
The baseball team is literally AA baseball.
Yeah, I know.
I mean, it's like serious stuff.
Yep.
It's fun to go watch games out there at Reckling Field. So,
tell us about within Texas, and I think of the climate change and all. Is it getting hotter? Is that part of the equation? And like, okay, what are we going to do about this heat?
So I left a couple days ago. It was 95 degrees. So yeah, it's hot. Last summer we went over 40 days, 100 degrees or hotter.
So how does that change society? Hot. I mean, someone fancy like you goes from air conditioning to this. What about the rest of society?
It changes the way that you approach the things that you do. I think it's going to increase energy needs. Look at what's happened to the grid in Texas back when it was cold and now. We do, and that has caused some problems for us. We had the ice storm and the freeze that caused problems on the opposite side. For the heat, it's the same thing. You get rolling blackouts, not as much as you see in California, but still, it is a different way to approach the way you live.
But you're booming renewables.
We are.
Right?
They are.
I mean, I don't have the numbers in front of me, but Texas is leading the way, right?
Absolutely. We have to find a way to generate that energy that people need, and then you add on to it all of the new things with the electric vehicles and other things. That's just more pressure on the grid.
I mean, you got a woman comes in the studio and talks about vehicles.
Yes, exactly.
That's Texas.
I mean, we like our big trucks in Texas, right? So
where's the S&P 500 in a year?
Can I say it's just higher? Does that work? I don't know.
That's a Texas thing.
It's going to be, I think we're going to have a lot of choppiness from now till the end of the year. I think you get a pullback, but then you're going to see that momentum go higher. So a year from now, we are higher, but it's not going to be a straight line up. It's going to be quite a bit of choppiness.
Fortunately, I'm out of time because we got the rest of the time we could spend on the Houston Texans. It's their year.
Let's go, Texans. Come on. CJ Stroud, D'Amico Ryans.
They're everybody's.
And the Astros, I mean, I got to deal with these guys again. The Yankees, am I going to have to go through the Astros again, I think.
Victoria Fernandez, thank you so much for joining us with Crossmark, the Chief Market Strategist, with a really important view. They'd love to have people in outside the 3 zip codes of New York City where congestion tax.
We need to get out on the road, Tom. I keep telling everybody.
A road trip.
Houston would be a good place.
I've never been. I've never been to Houston.
I think awesome. I always forget that Houston, it is right on the Gulf.
Oh,
and so whenever, I always forget that it's right there. And so when storms come along, our good friends in Houston are at risk there. It seems like every year.
They are. Futures negative 15. Well, we're not open yet. 5 minutes away from opening the market. Futures negative 15. The VIX 13.08. 10-year real yield. Well, it's back to 2.15%. That's important. We have Apple Intelligence. We have surveillance intelligence. On YouTube, on Apple CarPlay, good morning. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 9:29 on Wall Street as we await the opening bell on the New York Stock Exchange from the Interactive Broker Studio. I'm Amy Morris, along with Tom Keene and Paul Sweeney, and there is your opening bell on the New York Stock Exchange. We are looking at the numbers now as they're coming across. The S&P 500 is down 14 points, now at 53.46. Dow Jones down 152 points at 38,712, and the NASDAQ is down 32 points at 17,159. We're looking at the 10-year yield now at 4.45%, the 2-year yield at 4.85%. And we check markets for you all day long here on Bloomberg Radio. I'm Amy Morris. That is your opening bell report. Tom and Paul.
Amy, thanks so much. I mean, so many rumors out there. Macron's going to resign, and that was pushed aside immediately. We got to push aside another rumor out on YouTube live chat.
Yep.
Crushing rumor out there that Damien Sassower is retired.
No.
And we've got to just put a halt to this right away. Mr. Sassower is not retired. Now, granted, he's working a 3-day work week.
Yep.
I mean, he's pulled it back a little bit, but he's still very
good
much
to know.
with Bloomberg LP in the derivative space. And I did notice earlier, Paul, seriously, your Chinese yuan 7.25 is a weaker yuan, and dollar DXY through 104 to 105. You begin to look at 106. It's a big deal, but we got some resiliency, some dollar strength with the troubles in Europe. Right now, the Dow, a negative 200. Why don't you bring in our TCW? What's TCW? Help East Coast people.
This is big.
They have no idea what TCW is.
All right, when you're on the sell side like I was for a million years, and you went out to LA, you had to meet two clients.
Capital Guardian.
And TCW, Trust Company of the West. I mean, if you didn't have those two meetings locked down, just don't even get on the plane because the rest is just a waste of time. Now, I, of course, would avoid these fixed income people at TCW like the plague and stuck with my equity guys, but they're not too bad. And I've come to get to know some of these people. Brian Whalen is one of them. He's co-CIO, fixed income at TCW Group out there in Los Angeles. How he got lost and found himself in Los Angeles, I have no idea. Brian, what are we going to get from our Federal Reserve tomorrow here? A lot of folks are telling me, let's just sit tight. They don't really need to do anything crazy one way or the other.
Yeah, I've called it the waiting place. It's not the Dr. Seuss. It's where we all are. I think the Fed has the luxury of waiting. But the market's going to be looking for, in addition to the earlier CPI numbers in the morning, the market's going to want to see is the Fed going to project that they're going to cut once or twice by the end of the year. That's the big question mark, and it's probably going to be about what kind of reaction we see in the bond market, whether we see a bearish reaction or a bullish reaction with regards to rates. And then, in addition to the waiting place, you're looking at investors at the same time. We've seen the last 2 months. We've had a little bit of something for everybody. We've had just enough of a slowdown in the metrics, whether it's manufacturing or retail sales, small business sentiment, et cetera. It's kind of slowed down here, and that gives the everyone in the recession camp some data that says we see the slowdown, rates are biting. This is it, and then it gives the no landing, soft landing narrative camp the ability to say, this is perfect. It's slowing down just enough to give the Fed cover, just to kind of slowly lower rates, but we're not going to enter a recession because the slowdown will eventually plateau and we'll stay in this kind of low 1% to 2% growth environment without actually tipping into a downturn.
So, Brian, does that mean, in my bond portfolio, I actually just stay short term, maybe even just park myself in 2-year treasuries at close to 5%? Or do I take some duration risk? Do I take some credit risk? What do I do here?
We do like duration. We like interest rates. We think they're coming down over time. I think, the Fed, or I should say the market actually, is probably looking at the wrong question as to when the Fed finally cuts, whether it's September or December. That's probably not the biggest impact to your bond holdings. It's really going to be about the pace at which they move. I think if you're a bond nerd like us guys, I think you want to talk about geeky things like partial durations and where you want to park that, and that the best bang for your buck there is probably in the very short end, like 2 years, like you mentioned. But if you think you're like the other 99% of the world, and you just kind of want to buy a credit a risk-free investment and just kind of park it away, I think the 5-year is probably the best place to do it. Even though you get a little bit lower yield than the 2-year, you do get to lock it in for 5 years as opposed to just 2. So that seems to be the nice place the sweet spot to land.
There's been, Brian, an absolute carnage in the bond market on total return. You've lived this with the Metropolitan West Total Return Bond Fund. We're in a range, and I guess we're sort of at the upper bound of the range. Price up, yield down. I guess it indicates good things. You've had a good 30-day period, to say the least. Are you enthused that we break out of the range and see price up in a price recovery towards a trend of another time and place?
Yeah, look, everyone who lives the bond market every day I still have some scars over me from 2022. It was literally the worst returns for the average bond market investor in history. We've seen larger rate rises, but previously, the 70s, the 80s, when you had those rate rises, you were going into it with a lot more cushion, meaning you were getting a high amount of interest kind of coupons to absorb the price decline. This time going around, we had been in this era of QE and very low interest rates, so your coupons were very low, down near about 2%. So when rates went from basically 0 to 5 overnight, and you had all this price depreciation, you didn't have any kind of coupon to absorb it. And so we had this double-digit negative return in the bond market. This time around, I think you've got two tailwinds for the bond market. First of all, now you're getting some coupon. We talked about the 4.5% to 5% coupon you're getting in U.S. Treasuries. You can add another 100 basis points to that. You can get 5.5% to 6% in very high-quality corporate bonds. We haven't seen that in a very long time, but that's only the kind of the first part of your return in the bond market. The second part's going to be about the journey, but we expect that rates will come down over the next 12 to 24 months. We expect them to come down quicker than the market does, and if that's correct, you're also going to get that tailwind of price performance. So you get 5.5%, 6% of coupon, plus maybe another 5 to plus % of price return. You could see double-digit returns, positive double-digit returns in the bond market.
That was beautifully explained. That was a clinic, and very classily done, given the carnage. It's out there. What I love about it as a hack is, Paul, no one believes this story. I don't think anybody really believes what Brian Whalen's talking about in terms of combined total return.
Hey, Brian, I look at year to date. The best returns in the fixed income business has been in U.S. corporate high yield, and the same can be said for last year. Why is high yield outperformed when I thought we were supposed to have a recession like any minute?
Yeah, I think investors have short memories. They like to extrapolate recent events, look at the rear view mirror, and assume it's always going to be the same going forward. And in addition to that, we just kept talking about yield. You know what? 8-9%, that looks pretty good for a kind of well-diversified high yield investment. I would say, again, depending upon what hat you wear, if you're someone that just wants to set it and forget it, and you can buy a high quality, high yield bond fund that's well diversified, regardless of the volatility, that's over the long term, that's still going to probably provide you a really nice, healthy investment. However, if you're someone that does what we do here at TCW every day, and you're really thinking about what's the price performance week to week and month to month, we think with the expectations that the economy is slowing more rapidly than the market expects, we expect higher amounts of volatility. If we're right on that, there's going to be some short-term pain in lower quality parts of the bond market, and the high yield is one of them. The compensation you get to invest in a high yield bond fund today is about an extra 3% of yield over a treasury. So instead of 5% in treasuries, you get that extra 3, so you're getting about 8%. But if we hit a period of volatility and economic slowdown, you're going to see that 3% go to 4 or 5 or 6 or something more than that. And what that's going to do, that's going to hit you in price in the short term. If you want to set it and forget it, not a bad investment. If you really want to be an active manager of your portfolio, there's probably going to be better entry points for high yield over the next 6 months.
Brian, thank you. Great update. Brian Whalen with TCW. Is a trust company of the West?
That's it.
I've never
They're
been
good.
in
Boy,
TCW, thank you so much for that. We're open down negative 259, SPX down 20 points. The VIX quiescent 13.11. I'll bet you that will nudge higher here with a market challenge to find a bid. Bitcoin down $2,500, 67,000. We may get a 66,000 print soon. Crisis.
Exactly.
With our news in New York City.
Thank you very much, Tom, Paul, Amy. Jurors have started their second day of deliberations this morning in the criminal case against Hunter Biden over a gun President Joe Biden's son bought in 2018 when prosecutors say he was in the throes of a crack cocaine addiction. Jurors deliberated for less than an hour yesterday before leaving the federal courthouse in Delaware. Hunter Biden's lawyers have argued he did not consider himself an addict when he bought the gun. Secretary of State Antony Blinken said Israeli Prime Minister Benjamin Netanyahu reaffirmed his commitment to a ceasefire proposal during a meeting in Jerusalem. Bloomberg's Jumana Brzezinski reports there seems to be an agreement on the first phase of the three-phase plan. It's the second phase that could be more difficult.
And here, Hamas are saying that they're not going to sign on to a permanent ceasefire unless Israel provides some sort of guidance or commitments that they're going to stick to it. Israel are saying that they are not going to sign on to a permanent ceasefire unless they've secured the release of all hostages and completed their military objectives. So there's still some daylight between the two sides, but the fact that Blinken is here shows that some progress has been made.
Bloomberg's Germana Bersetchi reporting from Dubai. The UN Human Rights Office said today that both Israel and Hamas's actions could amount to war crimes. Spokesperson Jeremy Lawrence says the IDF raid to release 4 hostages was conducted in a densely populated area and resulted in the deaths of hundreds of Palestinians.
By holding hostages in such densely populated areas, the armed groups doing so are putting the lives of Palestinian civilians, as well as the hostages themselves, at added risk from the hostilities.
UN Human Rights spokesperson Jeremy Lawrence. President Joe Biden's administration will formally propose a rule to bar medical debt from individual credit reports today. The move would prevent major health care bills from negatively impacting borrowing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Amy.
And now your movie lodestone. We go to the celebrity lodestone with Scarlet Fu, surveillance lodestone, Paul Sweeney. Bad Boys, Ride or Die, 56 million box office. In the old days, that's got to be like 150, 200 million. I mean, isn't that a big number?
It's not bad. It's not bad. I bet when you see these studios come out with what they think are franchise films that maybe have cost
Will Smith.
or $200 million, you like to see a domestic U.S. at least $100 million opening weekend. Particularly because they launch them over these long weekends. But again, it's not a bad opening.
Not bad, but the summer's not happening. I mean, we're early June.
Am I that old where I remember late night TV, time now for the $1 Million movie? Remember that?
Exactly.
That was, and that was big time. That's when Grand Hotel used to be running in there. But now, I've gotten big geezer.
Was there a Memorial Day weekend? I mean, was there? I have no recollection.
There was a couple of movies that were launched, but the fact
4th
that
of July.
No, it's Memorial Day, 4th of July, and to a lesser extent Labor Day. When everybody is out of school, but by Labor Day, a lot of the country's back at school. So, Memorial Day historically was one of the big weekends of the year, as is July 4th.
I don't know.
For movies, for movie releases, but it hasn't been that way this year. And again, a lot of Hollywood's telling you. It's 2025 is the year when we're going to have a lot of big movies. We had to postpone a bunch because of the writer's strike and the actor's strike.
Where are my kids? I mean, they used to be, I've said this before, every weekend, even midweek, I got to go to the movies.
Yeah.
It adds up.
Yep.
Now I don't get that anymore.
You can get movies anywhere, on any device, anytime, any service.
They're on their laptop.
There you go. On the phone. Okay. Yep.
Ride or Die. Should I go see this thing?
I think that's
Bad Boys.
Yeah, I think you can go a little matinee. Do that.
I could see it.
I can see you doing that. I mean,
that's your movie theme for this morning. I want to go see Furiosa. I guess that's really
Alex Steele told me that is a great movie.
She liked it.
She's still into it. Yes.
Wow, Alex Steele.
Further
movie reports here at 10 a.m. as well. Dow deteriorates at negative 320. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Traders waiting for tomorrow's CPI data in the morning, and then news from the Fed regarding rates tomorrow afternoon. Seeing red on the screen today. S&P 500 down 0.4%, NASDAQ down 0.1%, the Dow down 1%. That's your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Amy. Greatly appreciate it. This is a surprise.
Yeah.
Let me describe it for you as best I can. Apple 196. Comes down 193, doom and gloom, and then everybody read Gene Munster, Paul.
Yep.
And we got a moonshot on opening trading right up buttressed against 198. That's Apple up $5 off the gloom of yesterday afternoon.
Yeah, stock in early trading time up 2.4%, just under $198. Gives you a market cap $3.03 trillion. Stock's up about 2.5% year to date.
What a joy to speak to Mark Gurman of Bloomberg News yesterday, definitive on Apple. Let's listen.
You saw nothing today that's better than the competition. You saw nothing today that's different from the competition, except marketing and a focus on privacy, right? So that's the difference here. They're not the first, but they're also not the best, and they're not the most advanced. They're here extremely late, and they showed up to the party without a gift.
They showed up to the party, and we saw it yesterday. Full disclosure, I turned it off after 16 minutes because I knew Gene Munster would tell us what the hell happened yesterday. Deepwater Asset Management's Gene Munster. Gene, I saw your Twitter feed. It's simple. The market listened to Gene Munster. Why is Apple up $5 off the gloom of 5 p.m. yesterday?
The reasons it up is because that even though these features are features that we have seen that those that have been following AI for the past year have seen from other companies, the reason why the stock is up is these features are now going to be brought to Apple users for the first time. They are transformative, and Apple is going to require you to upgrade your hardware to get access to these. And so about 85% of the Apple hardware is going to be needed to upgrade. And at the most basic level is that these features are going to be something that I believe consumers are going to want.
When will the sell side modify their what ifs, their margins ratios, their free cash flow guesstimates? Does that happen now? Does it happen 90 days from now? Does it happen in 2026?
I think what you'll see is maybe 20% of the analysts are generally on board with this is going to have a nice lift over the next 1 to 3 years. And so you'll see some of those changes probably before they report the June quarter. So call it in the next month or so. And then you'll see the next phase, call it 30%, will come in after the next iPhones come out, which will be middle of September. And then the laggards, the 50%, will probably come in early, probably when they report their December quarter of 2024. So that will be early in 25. But I think that the trajectory of this is you want to own stocks ahead of positive earnings revisions.
Right.
And I think over the next 6 to 9 months, we're going to see those. And just to kind of put a final thought on what the magnitude of those revisions are, is that we're talking about growth going from, call it 2% in calendar 24 to around 10% in calendar 25 and maybe 12% in calendar 26. So it's a nice move higher. It's a far cry from what we've seen from some of these other AI-powered companies in terms of their growth rates, but it is for Apple up 12%, up 10% is much better than the down 2 that they have reported on average per quarter for the last year and a half.
Paul, Apple off the April gloom, that's where I sold everything, up 20%.
I know,
2-0.
exactly. Perfect timing again. Hey, Gene, I'm out here sporting an iPhone 11. Is this change to AI? Is that gonna prompt me to get back into the Apple Store and upgrade in September?
I think it will. And I think that this is the fundamental piece that a lot of those who just analyze this so closely are focused on the trees versus the forest, is that I think that people like you are going to see these features and want to get upgraded. And maybe in your case, you're probably due for an upgrade either way. But I think in the case of many people who are 3 years out, I think that they're going to see these features and undoubtedly want them. This is the biggest change in Apple since the iPhone came out. And that's a bold statement, but just to put some perspective on it, over the past, call it 15 or so years since the iPhone came out, what we have seen is that, we've had things like Vision Pro, we've had services like Apple TV Plus, we've had the iPad, we've had the App Store. Those have been kind of the cornerstone announcements, but what this fundamentally does is change the way that we interact with these devices. It's going to add more value. And Paul, I think that is going to be a major catalyst for upgrades here.
So it's interesting, Gene. I'm certainly ready for it. You're right. I need to get out there and upgrade. But so how do you think Apple is really approaching AI, Gene? Is this kind of like the first salvo in what will be a kind of a multiple product or multiple software kind of approach to really capturing AI in some of the use cases?
It is. I mean, this is definitely the first step. And I think what we've seen is this distinction between small versus large models. And so from a consumer perspective, you don't need to worry about that. Don't need to think about what the distinction is. But Apple is really tackling the small models first. That's going to be the parts of it that are going to do things related to our photos and our messages. All that data is going to be kept encrypted and private on your device. But the things that you can do with that is relatively limited. To put it in perspective, that we measure the intelligence on these models in terms of parameters. And in the case of these models, these are 3 billion parameter models. That's a 3 billion parameter model. GPT-4, they haven't disclosed what that is, but it's probably around a trillion. Wow. And so this is an order of magnitude different. They need to get more, to answer your question, Paul, in the next 3 to 5 years, to get more into those large language models to really have control over their AI future.
Gene, Eric Schmidt didn't walk out on stage yesterday. Is there any continuing dialogue with Google? To me, the bombshell, even with the litigation, various and sundry governments going after them. I mean, I guess I got a linkage of Apple and Microsoft through OpenAI, but am I going to get a relationship between Apple and Google?
So this is going to have some form of impact. And just to quickly recap, is Google pays Apple somewhere between $13 and $15 billion a year to have Google as the default in your Safari browser. So it's a big number. Google has a product that competes with OpenAI's GPT that they didn't get the business. So they're probably frustrated with that, but that's beyond the point. What the point is that Google makes their decisions based on data. And if it continues to be profitable for them to pay Apple $13+ billion a year, they'll do that. But one aspect here, as Apple integrates GPT into their experience, people will Google search less. And so I suspect that the value of the deal with Google will diminish over time, because it's simply there's just going to be more usage that's going to be shifting towards GPT. Apple did say they will eventually allow you to plug Gemini into some of their base applications. So we'll see how that plays out longer term.
I got another hour of questions. Gene Munster, thank you so much. And I should point out, Mr. Munster, Deepwater, just tireless out on LinkedIn and Twitter. He was the informative voice yesterday.
Yeah, absolutely.
Everybody else is doing their thing, and Gene's adding value.
I mean, Gene put in context a while ago, talk about AI. I mean, he puts it right up there with electricity as to the impact upon, people and consumers. Yeah. And he puts the internet at like 40, just to give you a sense of scale and magnitude of how Gene views AI and its impact on technology.
I felt old yesterday. Seriously, I felt like it's really moved on. And folks, I'm going to get a new phone. I'm due to get a new phone like everybody else. Tucker's not getting a new phone.
No, the flip phone's doing just fine.
Tucker's, he's still got. It's like what Michael Douglas had. And
yeah, exactly. That Wall
movie.
Street. Yep, there you go.
Yeah, well, it's like Tucker's edge of quality. There's a tour going on now. Miss Nix is out. And all I can say is her guitar player is 77 years old and could front with the Stones right now. Waddy Wachtel is an act of God. If you know him, if you've seen him. Literally, they made a Muppet after him. He's doing the 16th note chop here. Waddy Wachtel with Miss Nix.